All right, everything looking good, and we're live. Welcome back. It is 7/21/2021 and 8 p.m. on Wednesday, Eastern Standard Time. Nah, everything looks good over here. Let's get this thing started. Welcome back to the channel, Crypto Trend Trader, with our Wednesday midweek market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, like always, let's just get started over here. We'll take a look at our TNX 10-year Treasury yield, the interest rate paid on a 10-year U.S. Treasury bond. As we can see, we have come down perfectly and touch our green box here. That was our initial target for the 0.5 Fibonacci retracement for the move from our low down here in March of 2020 up to our high right here in April of 2021. Over that 1 year period, we traveled up from basically 0.395 all the way up to 1.783, at which point in time we showed some clear signs of topping out. When we broke down from that level, we expected the initial measure move of the channel that we were operating inside of. We did get a throw over where we broke out through the top and then came back down and broke down to the bottom. At that point in time, the measure move was hit, which is the heart line here, the dotted line, and then finally we came down to the 0.5 target. We did leave a gap behind, so we expected to move back up to close that gap. After we close the gap now, we have to see, is there going to be further pressure to the downside or strength in the actual treasuries themselves, or will we see weakness in the treasuries prevail, and then we'll see our bond rates or interest rates on those bonds rise. Last week we explained the relationship between the interest rates themselves on the treasury bonds and the price of the bonds. So I encourage you, that is at the very beginning of the video. If you did not see that live stream, go back and check that one out, as it will help to clear up how these rates can stay the same, but also have a different percentage on the actual bond itself because the price is changing. At this point in time now, we're just paying attention to, is this going to show further strength to the upside and continuation to a new high, or are we going to continue back down to a lower high, or I'm sorry, a lower low? We have two key areas in mind. The first is, after that, touching that 0.5 perfectly, the first is our red 236. The second is our yellow 382. So somewhere down in between 0.882 and 0.95 is our target to the downside, and potentially the end of the move. That would also be touching the top of this little top right here, basically coming back down and finding support on that level that was acting as resistance. We would expect to come back down and find support on that level as well. So it is possible that this has already bottomed out and we will continue to the upside. Markets will let us know very soon, I'm sure. Next, we'll take a look at the TLT. This is our 20-year Treasury bond. The actual bond itself has come up here now and essentially put in that right shoulder as expected. This is the move that we anticipated, and it has played out perfectly. Did get a burst to the upside and then burst back to the downside. So we did leave a gap right here in the center. And typically what happens when you leave a gap like that is you will get something like an island reversal. What an island reversal is, after a strong, powerful move to the upside, you will often get one candle and then a bearish candle right afterwards. Or sometimes you'll just get like an indecision candle and then you will gap down afterwards, and that's essentially telling the market that that was like our final push up. That was our final throw over, and now we will be headed back in the opposite direction. The same way that if that was at like the bottom of the trend, it would be like a spring. So you'll see here we topped out, we started to retrace, and then we gained a little bit of strength and we gapped up to the upside and put in this green candle here, after which we put in an extremely bearish candle. Once again, we gapped up above the previous candle, and then we sold down the entire body of that candle, including the gap itself, and then left this massive big red candle clearly, very clearly engulfing the green candle. And then after that, we gapped down once again. From when we gapped down the next time, we started to sell off fairly violently to the 200 exponential and simple moving average, and then we got a somewhat bullish candle push back up to the upside. So at this point in time, we're seeing an extremely bearish candle, a moderately bullish candle, basically telling us that there's a good possibility we will head back up here to that $149 range to fill this gap in the price action on the 20-year treasury before we get any sort of continuation, whether that is to the downside or potentially back to the upside. And this was in fact a false alarm. So but at this point in time, you know, the way this pattern is playing out perfectly, I would expect us to eventually top out here in the near future and then start to show weakness again in the bonds. And then obviously, depending on what happens in traditional markets, whether we show weakness or strength will obviously have various effects on our other markets as well, including this one. So we will take a look at our DXY next, our dollar index. And essentially, right now, we had taken a look at this last week, and essentially what looked like either a head and shoulders inverted pattern right here, or a, you know, if you're going to count this as a shoulder, and we have basically a slant neckline, or alternatively, Adam and Eve bottom. So this was our Eve rounding bottom, and this is our Adam pointy bottom here, and then we would have a horizontal neckline or resistance here instead. So the yellow line would act as our resistance, potentially even the white line, or the dotted line here, and like the actual shaded red area. So we can see the important reason that we did both of those things is so that when we get a situation like this, where it looks like we have very clearly broken out of our neckline of the inverted head and shoulders, we came back down and retested what was a resistance here, 1 time, 2 times, 3 times. We have tested it now as support. So we want to see, does it hold as support and we get continuation, at which point in time that is a confirmed break, and we would expect to get our measure move to the next target to the upside. Or also possible that we were incorrect about the inverted head and shoulders, and this in fact just a double bottom Adam and Eve, and then we want to see breakthrough of our yellow and then eventually our white resistance as well, and then them act as support and then see continuation. Or either one, they could both get rejected and it could just roll back over. It's always a possibility as well. Nothing is 100% in these markets. We can only use what we've learned in the past and what we're seeing on the charts. Make a educated guess based on that using risk reward ratio, probability of success, and of course position sizing to make a, you know, basically measured decision, and you know, go from there. Also inside of this smaller pattern here, we do have like an ascending channel taking place. This is typically a bullish continuation channel as we're consistently putting in higher highs and higher lows. So obviously we have topped out here once, twice, 3 times, and then a 4th time here as well. Bottomed here once, twice with that wick, a 3rd time here. So it's still very possible we come back down, bottom again at the bottom, and chop around inside this range. Typically, before we see a breakout of a channel, what will happen is we'll come from, say, like the top to the bottom to the top, and then come back down to the heart line, and then come to the top, or we'll come, you know, basically back up to the top, come back down to the heart line, it holds here, and then we'll see a breakout to the top, showing that there is strength. We're operating inside of the top quadrant of the channel, as opposed to before we were using the entire channel over and over again. So it's basically saying in this case the bulls are strengthening because the bears are no longer able to get the price action down into the bottom half of the channel. Therefore, the likelihood of a breakout becomes ever more likely the longer this continues to happen. It's not always the case, but typically more often than not, we will see that little pattern inside of the pattern take place before the break. So that's what we're paying attention to on the DXY, and we've been watching all these charts for some time. You can find obviously a broader lookout on any of these if you just go back to some of the previous videos. I'm not going to do the full deep dive into the like weekly and monthly charts as well this week. We are going to let's take a look at the traditional markets, because there's been quite a bit of volatility, and then we'll look at crypto as well. Matter of fact, there's been just quite a bit of volatility in general, which is what we like to see, because we care less about the actual direction of the markets and more about the volatility. Matter of fact, to tell you the truth, I would rather trade in a trending bull market at all times with reasonable valuations or technicals as well as fundamentals, but chopping around inside of a range with high volatility is just as good, if not, well, I'd say just as good, because I'd rather just put something to work and then forget about it. But here we have the Dow Jones Industrial on the daily, and we'll notice here there's a couple things taking place. So this is our first thing that we're paying attention to. This is our red resistance line here at the top. We'll notice that we topped out here once, we topped out here twice, we topped out a 3rd time, came down basically to the halfway point of our channel here. Matter of fact, let's do this because I can demonstrate what we were just talking about. We will take out these two lines here and use the appropriate tool. Sometimes I get a little lazy, or I just draw on the chart and then something else develops later. So in this case, we can, depending on how we're looking at this, I would say probably could really go either way, and I don't see it making much of a difference either way. But let's say we just have this sideways channel taking place right here. On this sideways channel, we came from the top to the bottom to the top. We had a spring take place here at the bottom, which is typical inside of a consolidation pattern. In this case, we would look at this as essentially being accumulation, because we're just going sideways inside of a range. We break out the bottom, it's a false break, and then we move up and break out the top. Now in this case, we had spoke about this though. When we came back up to the third point, this is specifically what we were talking about. Top to the bottom, and then to the bottom again. And then we come all the way, we see this bullish candle, a rejection of lower prices, come all the way to the top. We see a bearish candle here, rejection of higher prices, another rejection of higher prices, and then we sell off. Break out the bottom, but that gets rejected. Bullish follow through, come all the way back to the top of the range, come back to the heart line. We see a bullish candle take place here, a rejection of lower prices at the heart line, and then we break out the top. What we wanted to see here was consolidation, and then this resistance flip support. So what that means is this was acting as resistance 1, 2, 3 times, and then the fourth time we break through it. When we come back down to retest it, we want to see it act as support. So that is a break, a retest, and then continuation, or a support resistance flip. It was resistance, it has flipped to support, and then we see continuation to the upside. In this case, we got an extremely bearish candle instead, bearishly engulfed the previous 4 candles before that, gap down, and then saw an extremely bearish follow through after that. Did get bought up fairly aggressively, and then came back up, not quite a bullish engulfing candle, but now it's came back up all the way to the resistance. So what we expected to take place was this candle right here. We expected price action to move all the way back to the upside and close the gap that it left behind. And then essentially that's just looking for the market to agree that we came back up here, it got rejected and we're coming back down, or we came back up here and now we're going to see follow through, that this was just someone taking profits or someone making sure the price did not leave this range because they were not finished accumulating. So in the same way, this was someone saying we're not ready for this price to leave the range because we're not done distributing. This is the same thing to the upside. So right now, what this chart is telling us is there's quite a bit of indecision. We had a false breakout to the downside, we had a false breakout to the upside, and we're still inside this range. So once again, we just want to continue trading the range until we get a confirmed break in one direction or the other. Don't want to get overly bullish or bearish inside of this, but at this point in time, we are now retesting the resistance. So typically, in my opinion, typically what happens in a situation like this is we'll get a false breakout to the bottom, we'll get a false breakout to the top, we will retest the breakout to the top, it will fail, and then we'll see continuation back to the bottom, and then we have to see what's going to happen. It's very possible that this does not fail and continues to the upside, but based on the levels that we're at right now, the hard sell coming out of the bullish control zone, the multiple sets of bearish divergence that we have put in place between some of these previous tops, tells me that more likely than not, this is unsustainable price action. If we switch over to the weekly on the Dow Jones here, we can get a little better of a picture. Obviously, we still have 2 days left in this trading week, so we don't want to get too excited about it, but we do have a sell, buy, sell signal at the top of the range. We're still just chopping sideways, but more often than not, what will happen is this is distribution taking place, and we're just chopping sideways. Now, we do have all red histograms on the TJD, TDMACD. We have sold off below the slope line. The slope line is still blue, but this is a weekly time frame, basically telling us that we're exhausted at these levels and this move is potentially unsustainable. Now, if we go sideways here long enough, could this turn out to just be a bullish consolidation? It definitely could. It's definitely a possibility. We'll have to wait for the market to reveal itself. But at this point in time, I think more likely than not, well, I know based on previous experience that once we get multiple histograms in a row and we sell off below the slope line here, we're typically going to go into a bearish consolidation or sideways consolidation and then some sort of sell-off. So what I'm paying attention to on the big picture is our larger pattern here. We have a big megaphone pattern. We have broken out of the top of that megaphone. And now here we are at the top of the range, just sort of hanging out, putting in some smaller patterns. Is it possible we break to the other upside and see continuation? It definitely is. Is it possible we break to the downside and see continuation? Of course, that is possible as well. I do want to talk about something that we spoke about specifically in the group here. Let's take a look at, we were talking about best and worst case scenarios, what could potentially happen here. So just kind of going back to, our previous bull trend. This one was from like 1897. That's right, 1897, and then topped out in 1902. I'm sorry, 1929. 1897 to 1929. So that was basically going into the Great Depression. And then we saw, basically 3 years of downward action. What did we do during that situation? We were inside of this basically like channel. We broke out to the upside, consolidated, and then went absolutely parabolic. At which point in time, we eventually topped out, and then we sold off what amounts to, in that 3-year period, we sold off 90%. That has obviously only happened one time in history, going back to like the 1800s, which is one nice thing about the Dow Jones is we can look back 100 plus years and see what has actually happened, and gives us a realistic perspective over time. It's not like looking at a chart that's, 3 weeks old or 3 months old or 3 years old, or, like crypto, 10 years old. We get a very nice amount of price history. So now taking into account that sell-off of 90%, is there any way that we could have anticipated how much that sell-off would have been? Is there any way we could have anticipated where price action would have topped out? Well, let's take a couple of our tools here and just have a look. We'll look at the fib retracement tool first. So the first thing we would look at initially is basically our swing high right before that move took place, and then our swing low right after the move. So we have our initial swing high and then our initial swing low, and we can see here with our Fibonacci extension tool, the Fibonacci extension tool 2.618 took us up to basically the top. It did go slightly higher than that, but typically what we're looking for our targets are is like the 1.5 initially, the 1.618, and then the 2.618, and then of course if it continues after that, 3.618, etc. But those are the main targets I pay attention to. So you can see here that even back here in 1929 that this was functioning. This was already working. We came up here and we tagged the 2.618 perfectly multiple times, consolidated, and then eventually broke. Once we broke to the upside, that was very clearly a throw over because we moved up another, let's take a look at this. From when we broke through that 2.618, we moved up another 17%, which is nothing to scoff at by any means. But if you had a 17% reward with a 90% risk, is it worth taking a 17%, reward to take a 90% haircut? Obviously not. At that point in time, once that took place, we know we have topped out here. Obviously, we can go back and see, okay, the 2.618 level is obviously very important. Let's see if there's any way we could have judged how far this price action was going to sell off. Keep in mind, we're looking at 100-year-old price data here. All right, so we can very clearly see here from the bottom, from our initial price history, from the longest that this chart goes back to 1896, all the way up to 1929 and the beginning of the Great Depression. This was obviously the roaring 20s, exuberance, the shoe shine guy giving stock tips, etc. Much similar to the situation that we're in now, where TikTokers will tell you how to be a millionaire. We have basically gone through some serious similarities, everything from the 100-year cycle that's currently taking place, this is obviously 100 years ago, to, people that have absolutely no experience in the markets, all of a sudden becoming, essentially influencers, celebrities, big name people with large followings, telling you how to become a millionaire, selling their financial advice on, TikTok or whatever other platform that they're on, people shilling cryptocurrencies that they know nothing about, that were made in an hour by just cloning another existing cryptocurrency. Definitely some similar things going on here. Also, we see not only new entrants coming into the markets as we did back here. Like I said, all of a sudden the shoe shine guy, the taxi cab driver, the housewife, everybody was getting involved in the markets and becoming speculators, but none of these people had any actual experience or knowledge of what they were doing. Sounds a lot like what's taking place right now. Sounds a lot like it. So obviously that went into a parabolic bubble. All the new money came in, and then the experienced people dumped all the, assets on their heads. So that's, what I'm cautious of, what some other people are cautious of. Obviously, you don't know when the top is going to be exactly, but would I rather be out for the last 17%, and miss out on those profits to avoid the 90% to the downside? Of course I would. So obviously we can see here very clearly after we topped out right here. And again, this is something we discussed specifically in the group. So I'd rather just go over it here for everyone to see as well. But you can see the type of things that we do talk about, and the importance of people being able to ask questions directly. Once we topped out here, we immediately sold off to the 236. After that, we got a bounce to a lower high. After the lower high bounce was confirmed, it essentially confirmed we have touched the 236, which tells us this Fibonacci move is valid and that we have likely topped out and will be headed to our next target. Once we put in the lower high, it tells us we are now in a confirmed downtrend, as we have put in a high, a low, and then a lower high, and we will likely see continuation. We broke down from the 236. We came back up and retested it as resistance. That is a support resistance flip. It was support the first time we touched it. We bounced off of it. We came back down and broke through it. And then we came back up to it to retest it as support. It acted as resistance, at which point in time we saw continuation to our next key fib level, which was a 382. Once again, we bounced off of it, broke down from it, and you can see it got weaker and weaker and weaker. But each time we attempted to retest the prior breakdown, and you'll see obviously the follow through got less and less, and then eventually we came down here. We bounced specifically off of the 236, specifically off of the 382, the 0.5, the 618. We basically just blew straight through, and then of course we came down almost perfectly to the 786. So we saw a 78.6% retracement of the move from low to high, of the move from the 1897 to 1929. So are we in a situation like that? Let's see if we see any parallels inside of the chart. Well, it looks like since that time took place that we've been operating inside of this channel for what amounts to 100 years, roughly 90 years, 1933 to 2021. We have one reference point from the bottom here. We have a second key reference point here, and then we operated along that same reference point for some time, and then we have slightly broken out through the top. So we have at least 3 reference points on the top, and then here on the bottom we have 1 reference point, a second reference point, and then a third reference point here as well. You will notice that here we do slightly come out of the bottom. The reason I don't often use the initial move either to the upside or to the downside as part of what our chart is, typically you will see extreme volatility and stop hunts. So no matter what targets are in place, no matter what Fibonacci levels or bots or algorithms or traders or market makers or market movers, it's impossible to anticipate the parabolic nature of something going through an area with extreme amounts of volume and follow through in one direction or the other. So but you can see here very clear support and resistance. And once again, if we were to use the actual channel tool, which is a little more difficult over a time frame like this though, but we can see some kind of reactions through the center here. We have a very clear, turn it a little different color, let's go yellow. We have here a top and then multiple tops. We poke out a couple times, we find support, but it's unable to hold. We come back and run into it. We run into it multiple times again. We break out to the top of the channel, come down to it, break through it, and then again, we essentially have started forming another pattern inside of that one. We have essentially a low back here in 1982. We have a second low right here in 2009. We have a third low right here in 2020, and then obviously now we're at the top of the channel there. So that's sort of a little bit of history on what was taking place here. Now there's 2 ways that you can have a capitulation event. This capitulation event lasted for 3 years and was a 90% drawdown. Let's take a look at the other type of capitulation event that can take place. This period is from 1966 until 1982. So this is a 16-year period that we essentially went sideways for. Why is this important? Well, if you were invested in the stock market for 16 years and you didn't make any profits, you were basically a loser because of inflation and then also cost of capital. So even if you weren't paying interest on that money, you were losing buying power over time because, essentially price action was just going sideways for 16 years. So people begin to lose interest in an asset class, etc. What we can see here took place was we obviously had a little poke out the top right here, but we had a very clear resistance line that was acting. This is obviously a bullish pattern. As you can see, we have a flat resistance. Basically sell orders at that level in the books at $1,000, a nice round number. The more times we come up to it, the more likely we are to break through it, as eventually the people that are holding down price there or taking profits there will run out of sell orders, static orders in the books, and then we'll break through that resistance, often come back down and test it for support, and then we'll see continuation in the direction. In this case, since it's a flat resistance line, we would expect the direction to be up. You could also argue that, we were creating something of, you could argue it was something of, an inverted head and shoulders pattern. You could argue it was something of, a ascending triangle, whatever. It doesn't really matter. I could see obviously an ascending triangle. I could see obviously, potential for something like this where we're chopping around inside of it and then we break to the upside, similar to what Bitcoin did in 2019 before it left that like $3,000-$4,000 zone. And then also you could argue as well that there was something of a inverted head and shoulders pattern here. Something like this was taking place. The fact of the matter is, it's not about what pattern it was. It's not about what exactly you saw taking place. More importantly than anything, it's just about, recognizing that this is a bullish price action movement taking place here. Oftentimes you'll notice divergence from the head to the shoulder here, and that will give you a clue that we're getting ready to break out, etc. But more importantly than not, you either recognize this as an ascending triangle, you recognize it as an inverted head and shoulders, you recognize it as a potentially bullish pattern, and then you can position yourself accordingly. So why is this considered a capitulation, a time capitulation? Well, if you lose 90% of your money or 50% or 75%, a lot of people will just give up and say, oh, I don't want to be a part of this anymore. It's going down. It's going to go down forever. It's too risky. I didn't think this was going to go down. Stonks always go up, whatever. So they give up because they're losing too much money. Well, in this case, you're losing too much time because, essentially there's what's referred to as the time value of money. So if the actual value of the money is going down, that's bad. If the actual amount of time is going by is too long without the value going up, that is equally bad because you could deploy that capital somewhere else. If you have unlimited capital or unlimited time, neither one of these or one of these is less relevant to you. But since most people have limited capital and limited time, either type of capitulation event like this one or like this one can be equally devastating to you. So we have here from 1930 to 1934 an event take place. We have here from 1966 to 1982 take place. So we're looking at those are obviously key events. If we look at the amount of time between those events, roughly from the bottom here to the beginning of our next event, we have, I'm on the monthly here. So we have what amounts to 12,175 days between, or 400 bars. What does that work out to? Is that roughly 50 years? 32 to 65, or no, 33 years, I'm sorry. And then if you look at to the end of the time period, I want to say I made a connection here. Maybe I'm thinking of something else. I believe there was something time-wise that was worth noting too. Here we go. 604 bars. So if we take 50 years basically from the bottom of one event to the bottom of the next event. So we have a 50-year period taking place, which is notable as, we can see basically the time cycle or the importance of time. So now here we have from then to what would amount to 2032, what would amount to 2032. So this was like the midway period between the initial capitulation event and what would amount to the 100-year cycle, which would be 2032 basically. Is that relevant to people? Probably not, because most people are like day trading on Robinhood or something like that. But it's worth noting, it's worth paying attention to. Does that mean that since it's only 2021 that we have another, 8 or 12 years to this bull market to the upside? It's definitely a possibility. It's 100% definitely a possibility. And it's worth noting and paying attention to. So is there a way now that we could tell where the potential target would lead to the upside for our next move? Is there a way that we could tell, what the percentage drawdown is going to be in the future, etc.? Well, if we take a look at the way we charted from back here top to the bottom, we looked at essentially the Fibonacci extension from the previous high and previous low and got the 2.618 Fibonacci extension. So let's just say we did something similar here and we took from this top here to this bottom here and get our Fibonacci extension to the upside to see where this could potentially be topping out at so that we could be ready for it, whether it's tomorrow or in 2032. We could pay attention to those key levels. Once again, we broke out to the 1.618 level, and then we consolidated on top of it. We started breaking to new highs. We broke down from it and came down to some key levels as well, like the 1.5 and 1.382. And then we saw continuation to the upside. So in that event, if the 2.618 was going to play out again, we would expect the Dow Jones to come somewhere roughly, depending how technical you get on these charts and everything, and how far out you extrapolate this and whatnot. We would expect something around a 51,000 or 50,000 or 49,000, again, depending on how technical you got on this. But that would be essentially our target to the upside. So while many people are saying that we have already topped out in the stock market, while many people are saying that we're not even close to topping out in the stock market, I can make an argument for either one. I could defend either side of this case or argue either side of this argument. But the truth be told, I do expect the Dow Jones to continue to the upside and top out somewhere around this range here. Could I be wrong tomorrow and we've already put in a new top and we break back down and get a 90% drawdown? Of course. There's no way to know for sure, but I would rather have both of these scenarios in mind, ideally ahead of time, so that I can be ready for them and be positioned accordingly. Because what I don't want to do at this point in time, I do not want to miss, we're at 34,000. If we go to 15,000, I do not want to miss another 50% move to the upside over the next, few years, expecting that this thing has already topped out, nor do I want to eat a 90% drawdown from here or anywhere else. And then, of course, I don't want to be just stuck in a sideways market for the next 16 years either. And that's not the only period where things like that took place. We obviously had a situation like this in 2007 to 2013. So we had basically a 6-year period before we got back to the same high. And then inside of that 6-year period, from the actual high to the actual low, we had a 54% drawdown. So obviously any one of those situations could be devastating. You obviously don't want to get the double whammy, but you could argue that one is worse than the other, time or price, or you could argue that a combination of the two like this is equally bad, similar to what we saw take place here, but obviously not as extreme. So there's just kind of taking a look at the Dow and some of its previous price history. So when people say that it has to go up or it has to go down, they don't know what they're talking about. The market will do what the market does. And keep in mind that it is in the best interest of those in charge to have these things continue to the upside, as typically the people with power, typically the people with money will be invested in these as well. So it's in their best interest for these to continue, and the system to stay as long as possible. So the likelihood of the U.S. stock market failing tomorrow or the dollar failing tomorrow or anything like that is extremely unlikely. I think it's much more likely that these things go on much, much longer than anyone thinks is possible. So there's our Dow Jones chart, a little bit of the background on it, and then a couple examples of both price capitulation, time capitulation, and how important it is to have so many more data points than something like crypto does. So we can see here now on the S&P 500, basically we had our bottom here in 2020. From that time, we started putting in this little yellow trend line to the upside. We had also a blue trend line that was acting very clearly as well. We retested that blue trend line so many times. We had a low down here, a second low. We broke through it slightly with a gap down, but broke right back inside of it. Here we closed at it, broke down, rejected lower prices one more time for support, broke down here. We're able to get right back inside of it again. And now we've done the exact same thing again. We basically closed here, we closed here, we gapped down, and then we two candled back inside of it. We gapped down, we two candled back inside of it. So we'll have to see now, does this breakdown act as resistance? And then we continue to sell off like we're seeing in many of the other markets, not in this specific indices or these indices, or do we continue to the upside from this point, reclaim this area like we've done many times before and continue to higher prices? Again, I don't know for sure. We'll have to wait and see. There's definitely some warning signs that these markets are getting tired. But obviously, if you were looking at the daily chart and every time we got inside the bullish control zone and the background lit up red, you said, oh, this is it. It's over. We got to sell off. We're going to sell off. That's the dumbest thing ever, because as you can see on this chart, the bulls are in control 90, probably, let's say 70% of the time, 20% of the time, no one is in control when the background is just black. And then, 5% of the time, the bears are in control when it turns green. So, but here on the weekly chart, we can see the previous big sell-off was in 2009, the 2008 like mortgage crisis, stock market crash, etc. was around this time. From that time on, this was doing what many other charts are doing as well. We were operating inside of a very clear channel. You can see it here with green on the top and then our dotted green line in the center. We found obviously support on that green line, the dotted line, multiple times along the way. It acted as resistance a couple times as well, but we always broke back above it. Here, when we came all the way down, we sold off slightly below it, but made it all the way back in. And now here we are nearly at the top of that range. If we do the same thing that we did for the Dow Jones Industrial, and we just sort of look out at a potential target. Actually, let's start with the past and then we'll work to the future. So if we do the exact same thing and we just sort of, let me make this a little bolder so we can see it clear. We'll just make this a little bit brighter so we can kind of see what's taking place. Oh, duh, it's already on here. As you can see, I'm consistent and do the thing over and over again, and sometimes forget that I have already done it. So here we had, obviously, from the bottom down here, not quite. There we have from the top right here, to our bottom down here. Now we can look out and see, did we hit some of these Fibonacci extensions? Obviously, that was our top. Once we broke through the top, we came up here. Didn't see any crazy particular resistance, but we did see some pretty clear support at some of these levels, like the 1.236. We came up here and finally broke through the 1.618 and then found some support on it, broke down from it, came down again. Nothing too crazy, nothing that like overly tells us that that was what we're paying attention to. Overall, some interactions, but you can see here we have at the top of the range here a potential target at the 2.618 Fibonacci extension level, which would give us the target for the SPY of roughly 620 for this, or obviously like 6,200 for the S&P. So that's what we're paying attention to. Again, that's another like 50% to the upside. Does it have to happen? No. Is it worth paying attention to? Of course it is. We do also have obviously some key things taking place here. We can see, before the sell-off, was there anything that was telling us we were getting ready to sell off, or any way we could have identified that that was about to take place? Well, we obviously put in, a topping pattern here, multiple red histograms in a row, sold back below the slope line flipped over red, and then we saw quite a bit of continuation to the downside. Is there any way we could tell where the bottom was at? Well, we put in from this point here on the TJD TDMACD low, and then we put in a much lower low afterwards. So we had a low here, and then we had a much higher low right here. So we had some clear bullish divergence at the bottom on the weekly chart, at which point in time we did not see lower prices after that and continued to the upside. And then again, if we look at current price action, what's taking place? Well, are we potentially topping out? Yeah, there's definitely potential. It's a little early to tell, but we have something taking place that's worth noting. We have a peak right here, and then we have a lower peak here. We have more red histograms than green, and we are at the slope line now. It is still blue, but it's looking a little sketchy. You'll notice here on price action, we have a high here, and then we have a higher high on that last push up. We have a high here and a lower high here on that last push up. So we have some bearish divergence taking place, at essentially what amounts to the top of the range. Is it possible this is the absolute top? Of course it's possible. Is it likely? No, it's not likely, because of this entire trend up going back from 2009 till 2021. You could have tried to call the top multiple times and we're still putting in higher prices. So you would have been wrong every time, most likely, including this one, until we finally put in our actual top. If we switch over to, excuse me, take a drink real quick. If we switch over to the monthly, again, we can see a very clear top here inside of a channel that we were operating inside of. That channel going back from 1994 to our 2000 top, at which point in time we essentially double topped in 2007. So we had basically went sideways for 7 years, and then we sold off to a lower low. Imagine the devastation there. If you finally got back to your break-even price after 7 years and then sold off even lower, at this point in time, from our top to our bottom, you can see we had roughly a 56% sell-off. So if 7 years isn't long enough for you, and then another 50% on top of that, and then you finally get to a breakout new high in 2013. You can see we essentially went sideways from 2000 to 2013, 13-year capitulation event with multiple sell-offs between 40 and 56%. So markets do not always go up. Most people have not been in markets long enough to understand this. That's why it's so important that we always look at the big picture and pay attention. At this point in time on the monthly chart, we're not seeing anything. Can't say you're not seeing anything particularly alarming. Well, this giant green histogram, is somewhat alarming, but completely bullish at this point in time. We are also at elevated levels. We'll notice here that the stochastics on the Jewel Thief, the blue came up here once in 2004, once here in 2007, once up here in the same level, 2011, once here in 2014 or 15, roughly every like 4 years or so. Again here in 2017, sort of in 2019, and now here we are in 2021. So what are we picking up here on the time cycle situation? Well, roughly every 4 years or so, we're hitting these levels. So if we're hitting these levels every 4 years, and then we switch back over to our chart, that was one of our high levels. That was one of our high levels. Throughout this range, we kind of like skip a sell-off here, but we see it sell off from this level, one of our high levels. And then again here from this level, pretty violent sell-off. And then again, we're at those elevated levels as well. This time we are at 96.8, 97. So, we're at those levels where we're potentially maxing out. Can we still go up for a couple more weeks, a couple more months, or even another year? Of course, we 100% can. Could we have another 50% move and hit our target at the 2.618 Fibonacci extension? Of course, we 100% can. And the momentum and the vested interest of these markets is to continue going up as long as they can make possible. So, again, I don't think it's a good idea to just call tops on something, but it's definitely worth being cautious, especially if you're old. If you're 25 years old, you're watching this video, you don't have a ton of money, or, you obviously have 50 plus years, whatever, 40 plus years before you're going to be wanting to retire or anything like that. Who cares? Continue just investing in equities, because you can see that with the exception of a couple like 10 or 12 year periods, that if you invested them, eventually they made higher prices and continued to the upside. Not everybody has to be a trader. You can just be an investor, a 401k or, savings account. IRA or something like that is, not bad for people that don't have the time to do this stuff. What we're looking to do is we're looking to dodge these big sell-offs and then get invested near the bottom so that we can have better value and, increase our buying power over time. So that's why it's so important to look at these things. But overall, we're just looking for obviously like ideal areas to be in, ideal areas to be risk on, and then ideal areas to be out, or ideal areas to be risk off. So at this point in time, we don't want to be completely risk off in markets, but we're at elevated levels. We're seeing some alarming things take place on quite a few of these assets. So, in my opinion, I would much rather be like risk neutral or minimal risk at this point in time and, have the capital on the sidelines ready to be deployed should the opportunity present itself. And obviously the opportunity has presented itself in crypto. I don't think that opportunity is over. The opportunity has presented itself in quite a few of the tech stocks as they sold off over 50% from their all-time highs. We scalped over 40% on quite a few of these techs as well, back to the upside, sold them off, and now we can buy them back at that same price again. So in my opinion right now, this market is very, very barely trending to the upside. Very, very barely. We're essentially going sideways. Matter of fact, with the exception of a couple of the indexes, almost everything this year has basically been sideways. Many of these charts, many of these assets, the big names, the big movers have essentially been going sideways for the last like 6 to 7 months. So, if you've been able to make more than 8 to 15% in these markets so far this year, you've done better than the overall, indices. If you were in the indices, you probably did better than most people trying to pick stocks unless they were actually good at it. We spoke specifically about that. I think we said that roughly, I think the Dow Jones today, we were looking at the chart and talking about how bad Cathie Wood has done this year. All of her ARK funds are basically neutral or down or up within 5%. And then if we look at the Dow Jones is up over 20%. The NASDAQ, I believe, was up around 13%. The S&P was up 15%. The Russell is up 9%. So literally most people have made no profits this year. would have been better off essentially just being in an index. So this really is a stock picker's market to some degree, but also, you know, the big movers have been essentially propping up the market. So what does that tell you? It's not always the best time to try to pick something out if you don't know what you're doing. So here we have the IXIC, NASDAQ. We can see we have finally broken to new highs after essentially going sideways since February of this year. We put in a low, we put in the same high, we put in a higher low. This is an ascending triangle to the upside. The ascending triangle break should give us a measure move from the bottom of the triangle to the top of the triangle, conservatively, which would give us roughly a $15,700 NASDAQ. You know, we have broken out of the top. We came back down, retested what was previously the resistance, break, came back down, retested it as support, and now we're seeing continuation in the direction of the predominant trend, which is up, a bullish pattern, a bullish break, a bullish retest, bullish support, and now we're moving to the upside here. So, you know, that's obviously telling us it's bullish. But now are we going to see a high and then a lower high? Is this going to top out? Are we going to see a new high and then continuation for our measure move? Again, we don't know for sure. But what we can do is look at all these things, look at all these factors and say, okay, is everybody agreeing on stuff? Well, no. We have a very bullish pattern. We have a breakout. We have a bullish test and support. Everything is bullish on actual price action. Now let's look at our indicator oscillators. We have the sell buy sell signal and we've left the bullish control zone violently. You know, so that's kind of telling us, you know, a sell-off is coming, but did that sell-off already take place? Yeah, it looks like maybe. Here we have multiple red histograms in a row. We're finding support at the blue slope line and seeing our first daily histogram to the upside here. So is that just a reaction rally off of the slope line? Or is this just going to continue to the upside now to higher highs? Again, we don't know for sure yet, but that's telling us there's definitely some mixed signals taking place on this chart. So now if we switch over to the weekly, we can get kind of a better picture on this one. Again, we have a hard sell signal back here. We have a hard buy signal right here. And now we're inside of the bullish control zone. But what we're paying attention to is we have a high here. We have basically the same or slightly lower high here. And then we have a higher high right here. So even if we skip this one because it's a little sketchy, we have a very clear high here. We have a very clear higher high here. We have a very clear high here. We have a very clear, well, I shouldn't say very clear because this is green right now. So it could continue back to the upside at this point in time. But in order for this not to result in bearish divergence, you know, what has to take place here? This peak is up at 690. This peak is currently at 371. So this has to go up over 320 more points at any point in time. If this just comes up 320 more points to not be bearish divergence, because we've already put in a high on price action, but on our momentum indicator oscillator, you know, we have not. We're far, far from it. So this would literally have to go parabolic. How long would it take for this to go up and reach this level right here? Well, let's look at the previous time. Assuming, let's just assume, you know, that basically it was coming from this level right here and it was not going to stop along the way at any point in time. Just to roughly get an idea. This was June 30th of 2020. So from June 30th, it made it up to August 24th. So it took about a month to get up here. And then let's say a couple more days to get here. So roughly, if this just goes up for another month, it's very possible that this just keeps going up here. And we basically, just to kind of give you a little visual representation, over the next month, it could literally just go up here. And then if we just put in a slightly higher peak than our previous peak, that invalidates our bearish divergence and everything's fine. And that's definitely a possibility. 100% is a possibility. And it's worth paying attention to. But it's also worth paying attention to that that might not happen, so that we're ready for it either way. Damn, I hate this drawing tool. In case you haven't noticed, once you click it, you can never stop clicking it. You are stuck drawing forever. So yeah, this right now to me looks fairly bullish. I mean, it looks good. We're seeing continuation. We're seeing breakout. We're seeing consolidation at the top of the range. Typically results in continuation. But, you know, we are at elevated levels after a long-term trend to the upside. But, you know, again, let's look at how often we're in the bullish control zone on these stocks. This is back to 2009. I would say if you count it up, all the times we're inside of the red area that's highlighted in the background here, we're in the bullish control zone probably 75% of the time. 20% of the time we're in the neutral zone where it's black in the background, where it's not lit up. And then about 5% or maybe less of the time we're in the bearish control zone. So typically the bearish control zone in a predominantly bullish trend is going to be an extremely good buying zone. As where, you know, the bullish control zone in a predominantly bullish trend is not going to really tell you anything. It just tells you the bulls are in control. So if something is always going up, it's in a clear uptrend, we're looking for the bearish control zone as an opportunity to buy. In the same way that if something is always going down and it's always inside of the green zone, the bearish control zone, and then we see an area in a downtrend where it's inside of the bullish control zone, we say that's probably an opportunity to go short on this asset, because all of a sudden the bears are winning. The bulls are winning, and the bears have been winning 70% of the time, let's say, and then all of a sudden the bulls are winning 5% of the time. That tells us it's probably not going to continue unless we're picking, once again, the absolute bottom or top of the trend, and the trend is about to switch. So, and again, that's very, very unlikely, especially when something has been trending for years. You know, if something is going up for a year and then all of a sudden you're going to try to call the top, you have a 1 in 365, day chance of calling the top. As where if something's been going up for 365 days, if it's making all-time highs currently, you have a 364 out of 365 chance that you're going to be able to say it's going to keep going up before the one time that you're wrong and it does not make a new all-time high. So that's why it's so important to trade with the trend, in my opinion. You can do whatever you want because this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. To the moon! So Russell is next. Once again, we can see the Russell is inside of, let me turn off this, moving averages. And again, I use the same things over and over again. You'll start to see over time that, I'm extremely consistent. So am I always right? No. Am I right more than 50% of the time? Yes, much more than 50% of the time. Do I always do the same thing over and over again? Do I use sideways supports? Do I use Fibonacci extensions, Fibonacci retracement levels? Do I use pattern trading? Do I use candle trading? Do I use the same time frames, the same indicators, the same oscillators, the same moving averages? Or do I always discover new indicators and show them all of a sudden and tell you what? No, I do the same thing over and over and over again. That way it is completely measurable. It's completely, the ability to just look back and say, why has this been working so good? Or why has this been working so bad? And then I can overweight something that's always working in a specific market, in a specific asset class, or just in general. I can underweight something that doesn't seem to work that often. Like say my candlestick patterns don't seem to play out that often. Say my head and shoulders or my triangles or a specific indicator or a specific moving average just doesn't work out that often. I can underweight that. Do I still want to look at it? Yeah, sometimes, but I'm not going to pay as much attention to it. So, but here we have inside the Russell, we've essentially just been going sideways here. When we entered into this channel was roughly in January. We have just chopped sideways all of January, and we're basically just back at the heart line. You can see a very clear interaction at the top of the channel. We kind of fell short of it a little bit here. Maybe you want to move it down a tiny bit. It actually would probably make the channel slightly more beautiful. If we just pulled it down a little bit, we would have basically a little poke out of the top right here, a little more of a clear touch right there, and then a rejection right here. And then again, you can kind of see the interactions with the heart line here as well, fairly clearly. Doesn't matter, it doesn't have to be perfect. The key is to look at roughly the area that we're paying attention to. So we have a very clear resistance here at the top 3 times. We have a very clear support here at the bottom 4 times now, and then we have clear interactions with the heart line, center of the channel. So what do we know about these channels is, well, typically if we're going to break out in that direction, like for instance, this was a failed breakout. We came all the way to the top of the channel, we came down to the heart line, and then we got rejected at the top. Typically, this is going to give you favor that we might break out to the top. We were at the bottom, moved to the top, came down to the heart line, and then tried to break out, but we got a bearish rejection candle and then could not see follow through. So now we came all the way down to the bottom here. So let's say this got rejected at the heart line here and sold back off to the bottom. I would say there's a higher likelihood that it's going to break out now than on the initial sell-off from the top to the bottom. So does this look like an M pattern, topping pattern? And then do we get the measure move to the bottom of the channel? Yes, we did 100%. Is this going to amount into some massively bullish or massively bearish, situation eventually? Yeah, it's probably going to turn out to be a Wyckoff distribution pattern or a Wyckoff accumulation pattern, because typically a channel in a predominant trend like this results in one of those two taking place. It's tough to tell which one, but we'll have to wait and see. So if we switch over to the weekly chart here, can we get a better idea as to what's potentially going to happen? We got the hard sell signal. We left the bullish control zone. We got a buy sell, sort of a fake out here, but we're still just going sideways. We see a bunch of red histograms in a row. We're below the slope line, but the slope line is still blue. If we just hang out here and go sideways long enough, what's going to happen? This is going to flip over red, and we're eventually going to break down below the 0 line on this, and then that's probably going to result in a breakdown from this area. Is it going to break down all the way and come back down to $962? No, it's probably going to break down to a key Fibonacci level that we'll be ready for, from our bottom back here in March to our top here, which we're essentially still kind of grinding out. But at some point in time, if we get our measure move break of the channel, it's going to take us down roughly to the 236 area. If we break down from the 236, our next target is a 382. 382 is where we would likely bottom out, just because we have so much previous support there, as that was the key area that the Russell was hanging out at back here in 2018, back here in 2020, and then potentially a bottom right here. Do we have to come down there? No. Is it likely, though, if we broke down, we would see, that 1675 level again? Yes, it seems very likely to me, and this looks very bearish on a weekly chart. If we hang out here long enough, though, could this turn into a bullish reset and we see continuation to the upside? Of course, anything is possible. But again, I give the probability to what is more likely to happen, as just like our example, there's a possibility that if you don't go to the grocery store and you don't have any food, you will die. There's a possibility that if you do go to the grocery store and you get in a car accident, you will also die. The probability of those things happening, it's far more probable that if you stay home and don't have any food, that you will die. As where if you get in your car and drive to the grocery store, it's probably a 1 in like 10 million chance that you will die. So, probability is important as well as possibility. It's important to weight those things accordingly. So, but here we can see on the monthly chart, the Russell is bearishly engulfing the previous 1, 2, nearly 3 months worth of candles here, essentially trying to wipe out this year's gains. And then obviously we have a red histogram for the first time on the monthly, and then obviously we're seeing the blue stochastic roll over here. Could we easily just consolidate and then move to the upside? Of course, anything is possible, but we're looking at the likelihood. So let's take a quick break here. I'm going to take a drink, give my voice a rest, and then we'll continue on through, we'll just look at the rest of the traditional stocks, and then we'll move over to crypto, and we'll talk a little bit about the divergence and why I think there's a high likelihood that Bitcoin is potentially topping out after this reflex rally to the upside. But what could invalidate that, and how could we continue to the upside? Is it possible? Is it likely? Etc. Stay tuned to find out. I'll be back in just a moment, and I will, what's up guys, by the way, I'll holler at you guys in a minute in chat. Make sure you say hello while I'm gone or when you get back, and yeah, appreciate it. All the likes, subscribes, all that good stuff. So I'll be back in just a moment. All right, welcome back. What's up in the chat? Our kits. Sure, Michael Saylor is breathing a bit easier today, but what will tomorrow bring? What will tomorrow bring? Yeah, I don't know, man. If I was Michael Saylor right now and my average Bitcoin price was like 27,000, you're up roughly 20%. I would not be that confident at this point in time. But I know what you're saying. It's definitely breathing a little better. We know that Tesla and the Elon Musk position is essentially flat at this point in time. Yeah, I mean, quite a few people are obviously underwater. Yes, CW, definitely. Let them know. Smash that like button. Smash up the likey likes. But yeah, let's jump back into it. You guys know, obviously, this is not financial advice. I'm not your financial advisor whose markets are extremely volatile, so please do your own research and trade responsibly. Let's look at the XLB materials. Materials just operating inside of our little descending. Whoa, whoa, whoa. Descending channel right here. We have multiple touches on the bottom, multiple touches on the top. We're just paying attention to how that interacts and what takes place. Overall, though, obviously not making new all-time highs. I would expect this to continue operating inside the channel until it does not. Typically, this will result in a bullish breakout. So this is essentially a bullish consolidation pattern. So does it go to new all-time highs? Does it just get the measure move of the channel when it breaks out? We'll never know until it happens. But typically what you would see is the move from the bottom of the channel to the top of the channel, something like that, to, at least retest our key resistance area right here, which would obviously line up somewhere around like this range as well. So, but overall, showing quite a bit of weakness in the material sector, which makes sense. A lot of these prices got crazy. A lot of manufacturing slowed down. There's a lot less demand for things while businesses aren't operating. There's definitely some, let's say there's some air bubbles in the system here still, and we've been able to kind of squeeze some of them out with some of the stimulus and everything, and, some of the various assistance to businesses. But overall, let's just say that, we're not exactly operating smoothly at this point in time. And then obviously like coming back into basically, we're over what, a year and some months into this thing, and now it potentially looks like we're gonna have another round of it coming back again. This time, it's the Delta. Next time it's gonna be the Romulus, and then it's gonna be the Zeta, and then it's gonna be global warming. I mean, it's always gonna be something. What's that old saying? A man that would give up. What is it? Oh my gosh, I can't think of it. A man that would sacrifice safety for freedom deserves neither, or security for freedom, something like that. Um, and that's the truth, man. If we get scared and start giving up our rights, we're never going to get them back, ever. Like, there's another old saying, this is like saying day, there's nothing more permanent than a temporary government program. And I can't remember who says these things. I'm not trying to steal their sayings, but, they're just really, a lot of smart guys said a lot of smart stuff, and women too, obviously. And it's worth paying attention to them because they probably knew what they were talking about. XLC communication sector, topped out here, came down, find some support, trying to save the 821 cross. Overall looks decent. Obviously, sold off here, not putting in all-time highs. So again, communication, mediocre. XLE energy, this one is pretty weak overall. Obviously, oil prices are a big deal on this one, but this is one of the few things in existence that is not at all-time highs, or really even close to all-time highs. Let's turn off the moving averages and see what's taking place here. We obviously, and again, this is a specific perfect example of why it's so important to take profits on stuff along the way here. This was a trade setup that we were paying attention to. It then made a 14% move to the upside, at which point in time it continued slightly higher. And then here we are back down at the entry point. So if you didn't take profits, you basically just went up 14%, back down to flat. And now here you are right back at your entry, and you didn't make any money. You didn't lose any money. But, what's the point if you're not going to take profits along the way? You don't want to let that greed overwhelm you. But essentially, this XLE energy sector basically just chopping sideways. I mean, at this point in time, we're back at our prices from February 2021. So basically just chopping sideways. We'll have to see what happens here. This big circle is just for fun. No, it's actually for the moving average cross on longer time frames. But if we zoom out on the long time frame, we can see I do anticipate there's possibility for this to go up higher, but we're seeing some very bearish things start to develop here. We basically made it up almost exactly to the 618 from our previous all-time high to our all-time low here. 61.8% retrace. There's potential that, Oil prices could go higher or lower, obviously. But, you know, they've done quite a bit already this year. So now let's see what this pattern is starting to look like, what it sort of reminds me of right now. Well, we talked about the Adam and Eve pattern, and this kind of tells me like, okay, this looks sort of familiar. You know, if we have, once again, a sort of like Adam looking, you know, pointy sort of top right here, and then we have sort of a rounding top afterwards. Ah, got the old S instead of the curve. What was I thinking? Damn it. There we go. Let's try this again. You know, this is sort of telling me we have a potential Adam and Eve type top. Again, it's not that important if you identify the exact pattern that's taking place. More importantly, what you're looking for is we basically put in a top. We have a clear support line here. We put in a top around the same area, and then we came back down to that same exact support line again. So does this break and then we get the measure move to the downside? Does it turn into a, you know, from an Adam and Eve, often will develop into another shoulder comes up and then it turns into a head and shoulders? Will it just break to the upside and we were wrong about everything? Who knows? But, you know, it's definitely important to pay attention to the fact that this could easily move back up here. And the last thing we want to see if it does is get rejected around like that $54, $55 range. So, and then obviously a lot of this weakness is because of what's taking place in oil currently. But, you know, regardless of what's going on with OPEC or what's happening, you know, you never know when all of a sudden the destabilized like oil market is going to go back into full effect. XLF is next, financial sector. You know, essentially, I mean, it's doing pretty good overall, but what do we expect to happen in this in the long run? Is the financial sector going to get upset by things like Square and PayPal, like non-traditional financial stuff? Is it going to get upset by cryptocurrencies and blockchain in the future? You know, is it going to get upset by the fact that people have, you know, Americans have more money in the bank account than ever before? They have a higher savings rate. They're making more money, you know, with potential permanent wage increases taking place. You know, how do banks make their money? They make it off of like overdraft fees, off of percentages that they get on, you know, giving you loans. So if people aren't taking out loans, people aren't overdrafting their accounts, you know, would you expect banks to be making more or less money? Would you expect their multiples to be increasing or decreasing? Would you expect their valuations to be going up or down? I mean, I would say arguably that, you know, banks, you know, what if the Federal Reserve comes out with a new digital currency, Fed coin, and they skip the banks and stimulate the people directly? Everybody gets a Federal Reserve debit card and UBI goes into effect. You know, these are all potential fundamental situations or technical situations that could result in like bank losses or failures or them being completely obsolete. Do I think that's likely? No. Is it a possibility though? Is it likely that in the future banks lose market cap to things like PayPal, things like Square, things like FedCoin, things like cryptocurrency, etc.? I think it's very high likelihood. So in my opinion, the banks, the financial sector, etc., are some of the last places I would want to be. But again, you know, I don't even want to have any extra money I have in the bank or any currency I have in the bank, let alone invest in them. I mean, shit. But overall, chart looks mediocre at best, basically just going sideways. XLI, industrial sector. We spoke specifically about this. You know, this is just all these industrial charts look exactly the same. Exactly the same. You know, we have obviously, let's look at the big picture. It's always good to zoom out and look at the big picture and see what's going on. This is going back from 2008 to our current price action right now. We obviously have a giant channel. We have a very clear touch on the bottom. We have another clear touch on the bottom. And then we have 1, 2, let's say here, and then 3 touches on top. So we're very near to the top of the channel. Do we break out to the upside? Probably not. We probably just continue to operate inside the channel. So if we're that close to the top of the channel now, more likely than not, we'll make it the rest of the way to the top, and then we'll come back down to at least the heart line at some point in time. So, you know, there's not a lot of meat on the bone for this trade left. Now, what else is happening on like shorter time frames inside of this? You know, on the weekly, you know, we're seeing, obviously, we're leaving the bullish control zone. We're seeing all red histograms in a row. It looks fairly toppy on the weekly, I would say. And then obviously, if we just zoom back and go all the way back to the daily, we can sort of, I guess we can use an actual correct drawing tool. Let's use our parallel channel. We can sort of see, is there like sort of a channel taking place here right now? Is there something worth noting, you know, short or medium term? I would say there's probably something like this happening. And I don't always use these tools exactly how they're supposed to be used. I use them how, like, I know how TradingView is finicky, so I use them how they function better sometimes. So if you ever notice me doing something weird with the tool, it's not that I don't necessarily know how to use it. It's that I know how TradingView is trying to fuck with me. So here we have this channel taking place here. So now inside of this whole macro, we have this yellow channel here. So we have a top here, we have a top here, we have a top here. We have the heart line here where we had 3 interactions as resistance. We had like 3 interactions as support, you know, and then potential. We'll see what happens in this area as well. And then we have clearly like a bottom with little to no interactions as well. And you could even argue that, you know, maybe this bottom needs to, there you go, TradingView. Something more like this. You know, it's not, doesn't have to be perfect. You'll see though that we're just skipping this little guy right here. That little guy, don't worry about that little guy. You know, that's obviously like, you know, full on like capitulation follow through. And the reason, again, I do that is if we went like wick to wick on the bottom, we get much less like useful information from the heart line here. It's probably not what people are looking at, as opposed to here, we have some clear areas right there, clear areas there, etc. So that's why I like to do that. You know, you can do whatever you want. You can do things the proper way and always go wick to wick or body to body. But I do, it actually works and makes sense. So, but here we have basically, we're at the top of the range. Nothing particularly great or bad about this. But, you know, if we just look back to where price action is right now, you know, basically we're back at May's prices. You know, when we were at the low right here, when we sold off, we were basically back at like March's prices. So, you know, this thing's just kind of going sideways at the top of the range. Not particularly good or bad. XLK technology, obviously tech has been doing pretty well overall. You know, pretty strong. Basically sold off back at all-time highs. The whole sector is doing better than most of the individual stocks in the sector, which tells you that probably there's a couple of very large caps that are weighted heavily that are essentially propping up the entire market. You know, I don't know what they could be. I'm not sure, but I bet we could figure it out. XLP, consumer staples, you know, again, just sort of came back up to the top of the range here. Saw like a pretty harsh rejection. Indecision doji, followed by like basically like, you know, it's sort of like a shooting star, another indecision doji, you know, and then gapped up a little bit, bearish engulf. What happens here? Probably continuation to the downside. We're also seeing some weakness here. You know, do we break to a new low? Do we go below 68? We'll have to wait and see. Not particularly volatile. Not a lot happening here. You know, consumer staples are probably somewhere that we want to be if, you know, the economy is not doing as great as everyone says it is, because people are always going to be buying those consumer staples. You know, hence the name and the sector. Real estate, the old REITs, XLRE, doing well. Again, gapped up to a new high and then sold back down to it. You know, if this area holds long enough, we would expect continuation to the upside, you know, but obviously we're seeing some very clear bearish divergence taking place. We have a high here at this peak. We have a high here at this peak, much lower as we're in price action. We have a much higher peak. And then here on the stochastics, high here, much lower, and then high here and, you know, much higher. So bearish divergence on the daily. Will it play out? Who knows? But typically bearish divergence is a warning sign that, you know, we're about to get a counter trend move or a continuation move, depending on what type of bearish divergence we're seeing, which, you know, it's important to have cool little tools and tips and stuff like that so that you can reference them like 100 times until you finally learn it, or 1,000 or whatever it takes. So I always think it's a good idea to have resources such as, you know, candlestick pattern, candlestick like identification resources, you know, like the different actual chart patterns, you know, what's bullish, what's bearish, the different types of divergence, and whether it's going to be a reversal or continuation pattern, how to identify them, etc. Little tools like that are always useful, and I, you know, obviously I provide them for the group and everything, but you can get those on your own very easily. It's just nice to have those. I mean, print them off your computer, put them in a folder somewhere so you can reference them when need be. You know, turn them into a poster and put it on your wall. Your family might think you're crazy, but hey, maybe it'll make you some money. But this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. XLU, utilities. You know, this thing is just basically chopping sideways to down. inside of what amounts to a bullish consolidation pattern, in my opinion. If we go to a little longer of a time frame, we'll see once again we're operating inside of a very clear channel. Going back to our 2008 bottom, we had that stab out here, a little scare. Overall, pretty consistent. The heart line has acted as resistance many times and support many times as well. And then here we are basically chopping around inside of a little itty bitty channel in the big channel. Basically just doing the same thing, operating inside that. Got a pretty strong move to the top, hit our trade target to the upside. Could have made a whopping 4.3%. Boom! Retirement. Hello. Yeah, I mean, this is not really like, probably not going to get rich trading utilities. Let's be real. The volatility is lackluster at best. But, essentially operating inside of this channel, eventually I would expect us to break down from the channel or break up from the channel, and then eventually either break down from the big channel or break up to the top of the big channel. At this point in time, though, this is essentially just sideways to me. Again, if you look at where price action is now, we're back at October 2020 prices. So if you were involved in this for the last, October, November, December, I mean, you just basically spent the better part of a year in this and are right back where you started. I mean, these, probably not the best place to be positioned. if we're making all-time highs and asset classes are going absolutely parabolic, and then you're invested in the one thing that goes sideways, like utilities or Kathy Wood's ARC funds, it's probably not in the right areas. Might want to think about diversifying your portfolio. XRT, retail, retail is strong according to the chart. Retail is strong according to talking heads on CNBC and, the Federal Reserve. So this is a bullish pattern. It's obviously an ascending triangle. We have a high, we have a low, we have the same high, and then we have a series of higher lows. So eventually we would expect this triangle to break to the upside. Where does it take us? Probably I guess we could do the thing while we're here. We play with some of our chart tools. Just for I guess realistically from here to our low right here, and then our high right here, and then, depending how you wanted to draw this out, I'm just going to move it over here so we can get a clearer picture of what the actual channel looks like. Matter of fact, I should have done it how I was thinking initially. If we just move this down right here and kind of skip part of that wick, it gives us a much more reliable or much more accurate picture of what's actually taking place. Again, that is not how you're supposed to draw these, but it gives us a very clear picture of what the actual chart is, what it's actually telling us, and what we're paying attention to. So we're essentially operating inside of this triangle, putting in consistent higher lows with essentially the same highs. So eventually, the more time we spend, and this looks like it's getting ready to break out to the upside. It had a little stab to the downside right here, but it looks like the more time you spend at the top of this pattern, the more likely we are to break to the upside. And if we did get a break to the upside, there's multiple ways that you can chart this. The conservative way to do a measure move is from our initial point down to the top. You can also do the what's referred to as the flagpole or the lead in, which is the move leading up to it. I prefer to, I'm obviously a conservative trader, conservative investor, so I prefer to do conservative measure moves and take profits along the way. But essentially what it amounts to is something like this, which would give us a roughly $121 target to the upside, or 25% from where we're at right now. Is it going to break out to the upside? Probably not. It'll probably just go sideways based on price action history. But this does have a bullish favor to the upside. So XLV is next. Yeah, I mean, you can't argue that healthcare doesn't look great. I mean, it's showing some weakness here, but, we're at all-time highs, and we basically got a bullish rejection of lower prices. And I mean, let's be real here. We're in the middle of, or coming out of, or somewhere in the gray area of, a PANDEMIC, what I'm talking about. So I would say realistically, this is probably just going to keep going up. I think a lot of people put off healthcare. A lot of people are using things like Teladoc. There's pent up, it's not like dinners where people didn't eat out for, 6 months or a year during the situation. So they're just going to go out now and buy like 1 or 2 or 3 dinners, go out maybe like twice a week instead of once a week, or 3 times a week instead of 2 times a week. This is the type of thing where, like, if you're like, oh, I got this cancer and I haven't been dealing with it or whatever, like, probably eventually have to go deal with it. And the truth is, the longer you put it off, the more you're going to need treatment, the longer, the worse it's going to be, et cetera, et cetera. So this isn't the type of thing where if you just, skipped a couple of vacations, you're not going to make up for it. Like, eventually you need to get that same care, that same service, et cetera. So in all reality, I mean, this is probably, I would say, probably one of the most fundamentally and technically strongest sectors. So yeah, I mean, healthcare is probably one of the places to be. And then not to mention, obviously, the big V, and then the shot. I mean, realistically, now they're saying there's still people all over the world that haven't gotten a first or second shot. And then now all of a sudden they're saying, oh, everybody's going to need boosters, and we're probably going to need boosters this year and then probably forever. If you listen to Dr. Fauci, the future is grim. The future is grim. We're going to need a shot today, shot tomorrow, 3 more shots after that. And if you get tired of it, you can shot yourself in the head. XLY, consumer discretionary. Again, it's strong. We're at top of the range. We are seeing what amounts to basically a bullish reset. We're basically at the top level. Could this turn into divergence? Could this sell off? It's obviously possible, but again, consumer discretionary is strong. U.S. oil had a violent sell-off, looked very bearish, but got a nice bullish bounce. So the real question is now, we had an ascending triangle, the red resistance here. We got the breakout. We got the measure move to the upside. I deleted that trade setup that we had in place after it played out. That's done with. The trade setup is over. And then at that point in time, comes back down, retests what was resistance in multiple cases as support, finds initially strength off of that. So if this holds, I think it continues to the upside. We have a break, a retest, and then, a break, a retest, and then continuation in the direction of the predominant trend, or an SR flip. What was resistance has now flipped to support. So now we're going to continue to the upside. If this breaks and we go back down here, it's going to be basically a failed support. And, we'll see continuation to the downside. Is there an argument for oil prices going to $100? There most certainly is. Is there an argument for oil prices going to, $50? There most certainly is. Is there an argument for what Cathie Wood says, oil prices going to $3 to $12? No, she's fucking stupid. Like, maybe in like 50 years, once we have like sustainable energy and infrastructure in place and all of a sudden, but in order for oil to go to like $3 to $12 a barrel, like genius Cathie Wood says, we're probably going to need something else to substitute it. So unless you can figure out how to drive your car around with hydrogen, or, all of a sudden there's just like millions of electric cars and like pinwheels and water energy, hydroelectric and all that stuff, I think it's probably unlikely that anytime in the next 10 to 30 years, oil prices will be sustainably like consolidating at or around $3 to $12 a barrel. I mean, this woman is absolutely lost her damn mind. I agree with a lot of the things she's saying, but her time frame is just so stupid. Like, to say that we're going to have $3 to $12 barrels of oil in the near future for long periods of time is absolutely moronic. Could we go back down to $50 or $30? Sure, it's definitely a possibility. Is it possible we get a capitulation event where we have, futures go down to $3 or $0 or negative $30 or something? Sure. But the actual world runs on oil. Everything runs on oil. We need oil for anything. So unless we go into like an end of days, like Book of Eli / like Mad Max event, and even in Mad Max they still need oil, so the price goes up because there's no producers. I mean, it just doesn't make sense. Nothing this woman says makes sense. Her time horizon is messed up. I think she watched one too many futuristic space movies and is like, yes, tomorrow, sustainable energy, the future. Like, yeah, I think you're a little early there. Cathie wouldn't want to be ya. Okay, so let's rip through our tech real quick and others, and then we'll do crypto here. And we'll talk about that bearish divergence and why crypto's move may be over. Tesla still operating inside of a giant descending triangle. We have a high, we have a lower high, we have a series of lower highs, we have a low, we have the same low, potentially another lower low. This looks like a giant descending triangle to me. The Tesla trade played out nicely. We took profits, you know, at basically the top of the trade, a nice smooth 20%, at which point in time we spoke about this area in blue here. If this holds long enough, and it could easily see continuation to the upside up to one of these other levels. We already made it up to the 618. So are we going to make it to the 618 and still put in a lower high? Are we going to make it up to the 786? Are we going to sell off from here? I don't see a clear direction either way. But, you know, the truth is, basically to me, just looks like a giant descending triangle taking place. You know, the key area to look out for is, do we get a sustained close over $768? If we do, you know, we very likely make our way back up to the all-time high and then see continuation. Is that going to happen? Probably not. Probably not. I mean, one day, sure. Probably is, maybe. But let's take a look at what's taking place here. On the monthly, we're consolidating at the 8 moving average with a hard sell signal and a bunch of red histograms. What does it look like it's about to happen here? It looks like we're about to break through this level and go to $479. That's what it looks like to me. Let's look at the weekly and see what it's telling us. Well, we had the 821 cross. We tried to save the cross, and then it got rejected. We're still trying to hang on to it. But more than likely, what's going to happen here, this is failing. This is failing. So usually what happens is continuation to the downside, and we've lost this trend. I mean, the trend was to the upside from October of 2019 when the 821 crossed to the upside here. Since that point in time, it was up 1,231%. So I would say probably just trade with the trend. You know, if we see a clear cross back to the upside and continuation, are we going to see another 1,231% profit? Maybe. But I mean, I would rather take my chances with that than just sort of speculate in this tiny little range right here that all of a sudden we're just going to break to the upside, when in all reality, we're probably going to break to the downside. But what do I know? Just some guy on the internet talking about Kathy Wood. Airbnb, you know, this is exactly what we're talking about. We basically came all the way back down here, retested this same support at the 886 of our low to high Fibonacci level. More likely than not, you know, what's going to happen? Well, eventually we're going to just put in another lower high and then break down from this level. You know, we talk about a lot of times about selling pressure, you know, above overhead resistance, whatever you want to call it. Right now, let's look at the amount of time that Airbnb was, that you're in profit, basically. These people, if you bought right here, you're in profit. If you bought right here, you're in profit. If you bought right here, you're in profit. And then this is all people that are underwater on their positions. All this price action is people that are upside down. So every time we try to push to the upside, there's going to be all this over your head just saying, no, F you, I'm selling in your face, I'm dumping in your face. So would you rather be this little guy right here trying to bust through all this resistance? You want to be like the little, like, you know, 120-pound dude carrying the football, trying to make it through like a bunch of 400-pound linebackers trying to stop you from running the football into the end zone? Or do you want to be the linebackers? Because I don't want to be this little guy. I don't want to be this little guy trying to run through all this resistance. No, thank you. No, thank you. So yeah, Airbnb looks great if you're a bear. Pinterest, you know, another nice trade, 32% to the upside, basically from our reclaiming the 200 exponential and simple moving average. You know, this was very bearish candle right here, called the top essentially on that one, sold back off to a new low. Talked about the bottom down here, what we wanted to see to the upside, 821 cross, obviously ran back into our resistance, took profit, had this level already mapped out before we ever got there. You know, obviously the dollar sign means cha-ching, at which point in time we have now sold off again. Could you try to buy support in somewhere in this area? Of course you could, but I mean, why even bother? Why not just give it a little time? The 8 and 21 have crossed back to the upside. I'm sorry, to the downside right here. So more than likely what's happening, a situation like this. They cross the downside, try to reclaim them, it fails, and we go down to a lower low. Cross the downside, we try to reclaim them, it fails, and we go to a lower low. So Pinterest, Bumble, buzz, motherfuckers. We have this descending triangle taking place. We get the measure move of the descending triangle. Take the trade set up here, 42% to the upside. Take profit at the resistance. You know, this was support all through here. We expect it to act as resistance. It does. We get the SR flip. It was support. It is now resistance. And then we get rejected. Take profits. Cha-ching. sell back off. You know, do we put in a higher low here and continue back to the upside? Yeah, the longer we hang out at this level and we try to bust through this, the more likely we are to get continuation. Do you want to take a 10% with a 4% stop loss from this area? Or I guess realistically, you know, that was, I think we were saying a potential if support held or something. You know, could you potentially take a 18% trade with a 5% stop loss? Yeah, that's a nice trade right there, honestly. But is it worth it at this point in time? Or would you rather just wait and see how price action plays out? Wait and see some kind of divergence take place or something like that? I personally would. You know, once I do good on something, I'm not rushing to get back into it. I'd rather let the charts dictate what's going to happen in the potential future. What could happen right here, though? What would be like let's talk about the bullish case scenario compared to the bearish case scenario and like the symmetry of this chart and what it's kind of telling us. So let's look at our triangle pattern. We have essentially our top right here, our bottom right here, top right here, and then, you know, we basically put in a descending triangle very clearly, obviously. And then that was our measure move of the descending triangle. So then let's look at the inverse of that. What is the opposite of that descending triangle and what could potentially happen? Well, we could potentially be putting in now something more like this. You know, basically an ascending triangle now. So if we find support now, you know, this is a flat resistance. This is a flat support. This is a high, lower high, lower high. This is a low, higher, higher low, you know, and then potentially another higher low. So, you know, could this just go like this and then get a break back to the upside and come back up to the 786 or the 886 or to new highs? For sure, 100% could. And it's definitely worth paying attention to. And again, you know, there's definitely some trade setups to be had on this, you know, especially with the volatility inside of it. So, you know, things like this are nice to pay attention to. I also really like the symmetry of it as well. And then this is obviously like the clear target zone. But again, this is a situation where, you know, at this point in time, the majority of price action took place higher than the level we're at. So there's a good possibility that we're just going to consistently see lower highs. We have a high, a lower high, a lower high, a lower high. So more realistic than that, we're probably going to get rejected somewhere around here and see another lower high because there's just so much pressure above our heads. So Baidu, you know, you guys know how I feel about these Chinese stocks. There's just a lot going on right now. You know, I look at China as kind of like a canary in the coal mine for what we can expect, like economy wise, you know, the like cold wise, etc. So their stock market does not look particularly great. This looks to me like a giant descending triangle. And while I am bullish on Baidu long term, I just don't love how this chart looks right now. And I'm just not really interested. Same thing with Alibaba. This looks slightly worse as we're consistently taking out the low. So we have a low here, a lower low, high, lower high, and then series of lower highs. Underneath the 200 exponential and simple moving averages, they are now sloped to the downside. I have no interest in being in this right now. I'm not really trying to pick bottoms on this. And if we do, we'll pick it from a key level for like a scalp, but not interested. 10-cent music. You know, again, we had a key support in this range right here. We broke down from it. I don't like how this price action looks. Don't like how this chart looks. You know, we couldn't even get like a bounce off of that key support to potentially put in like a right shoulder of what amounted to like a potential head and shoulders. Again, don't like it. Diddy, you know, obviously, you know, this is probably going to take a long time to recover. We have obviously a high, clear rejection, lower high, and then we'll probably just put in another lower high. Also, you know, the Chinese government let Diddy know before they IPO'd they were under investigation because the Chinese government doesn't want them like, you know, potentially giving away like valuable information on like Chinese people, etc. Makes perfect sense. You know, makes perfect sense. They don't want other countries to have that, potentially national security or, you know, even just giving away information on your people. But the fact of the matter is the government let them know before they IPO'd they were under investigation. So they should have never IPO'd. It's super sketchy, if not illegal. It's going to be hard for this to recover. There is potentially a gap fill up to $14, but I mean, this was probably your attempt at that gap fill, in my opinion. Not interested. BZ, you know, this is a similar situation where we have a very clear support right here. We have a very clear resistance right here. The longer we hang out at this resistance, the more likely we are to break through it. So we are consolidating at that resistance. So, you know, eventually we might break through it. This doesn't look great, but again, we kind of have that symmetry going on. Looks better than a lot of the other stuff does. But again, we only have, you know, what, a month chart. Neo, this thing's been holding strong, had some nice moves to the upside. Basically had a descending triangle, broke to the upside, got a nice measure move, came back down, didn't even make it back to resistance, and is trying to push back up here. But we do have to pay attention to the high, the lower high, and then what would amount to potentially a lower high here. So, we had a clear interaction at the top right here where we actually topped out, and then from that level, we found support at 786, resistance at the 886. We bounced pretty clearly the 236 and around the 382 multiple times. And then we came up exactly to the 786. So do we get rejected at the 618? Do we get rejected at the 886? Do we go to new highs? I mean, who knows? I think more likely than not, we end up back down here at like 25 bucks, which is like a 50% haircut from a 50% haircut. So I don't know. We'll see. I'm just not loving these Chinese stocks. I want to look at the semiconductor space a little bit. TSM, this is one we've kind of been avoiding just because of, all the crazy like politics and potential that the country that these are manufactured in could literally be like wiped off the face of the earth and taken over. I don't think that's going to happen, but if you said, let's flip a coin, does Taiwan still exist in 5 years as its own independent country or not? I'd say it's probably about 50-50. I don't like the probability, and that's probably going to be bad for this company overall. So, this is a pretty bearish chart here. Basically have a low, basically have a descending triangle. I'm not trying to be heartless either. It definitely is a rough situation and sucks for them, but it is what it is. As far as investing goes, though, not a great looking chart, especially in semiconductor space when most stuff is like out here making like new highs. Nvidia looks good here. God, why does this chart look so crazy? Is it because of the split? Yeah, okay. What was does anybody know what the split was? Was it a 4-to-1 split? Oh, I can't even think. It must have been a 4-to-1 split. I want to say this was at like 800 bucks. I can't remember. I could go look, but it's really not that important right now. But yeah, essentially Nvidia at all-time highs, bullish space overall, had quite the move already. Trying to save the 821 cross. Last couple times though, it didn't really sell off, so we'd have to see what happens here. Zoom video, basically was operating inside of this descending channel, broke out from the top, could not hold it as support. I talked about potential for this breakout trade, 35% plus to the upside. We're basically at the invalidation level almost right here. So we'll see what happens. I don't like that it broke back inside of the channel. It could easily do something like eBay did, where it comes back up here and then starts showing strength. Maybe worth chasing it. Maybe not. It is finding some support on the 200 exponential, but the 200 simple has rolled over. I don't love that. And then also on Zoom, if we go to the weekly chart, we can see, the 821 has crossed the downside, tried to save it again, and now we're losing it. I think more likely than not, this thing comes back down to like 269, which is a pretty nice haircut. We're very clear, very clear bearish pattern. They're talking about changing their business plan and adapting to increase their market share or have new products or whatever. We'll see what happens. I mean, it's like a crypto white paper. Like, it sounds good on paper, but are you just marketing to me, bro? Peloton, this thing's still showing strength. Obviously sold off pretty violently up here, retesting this level for the third time now. More likely than not, probably breaks up and hits our target here before long. I think $145 is probably in the cards here, especially if like lockdowns and shutdowns and all this stuff occurs again. People are probably going to be using those pitons. Etsy, we got that same kind of like descending channel reset action going on here. Broke out through the top, finding some support here in this range. I think we easily get continuation back to all-time highs again. Is there a continuation trade to be had on this thing? There's definitely some potential for it, man. There's definitely some potential for it. I mean, in all reality, this is going to be a tough level to get past, that 786. We already made it to the 618 once. So, what would invalidate it? Well, if we took out this low right here, it would look like we're probably going to sell back off. So in all reality, a move back up to the 786 is 15%. Taking out that low is like 9%. So it's really like a 1.65 to 1 ratio. I don't really like taking anything that's less than a 2 to 1 ratio. So I would say no on there being like a valid trade setup currently. Could you take that trade? I mean, you could, but I would rather just take an easy trade with a high probability, high risk reward. But that's just me. There's a bunch of easy money, and then there's some hard money too. I'm always just going to say, I'll just go for the easy money. Got the cross to the downside, trying to save that cross to the upside, consolidate here long enough, and we likely see continuation. Saw a little chop like that previously. Was able to reclaim the level and then dumped back off here. That was back in March 2020, but this thing was already not looking great prior to that. Which is like the untold story no one talks about. A lot of these markets didn't look particularly amazing going into the CVD situation. So for them to all of a sudden be making like all-time highs and probably not doing as well, like on paper, is that a little fishy? Yeah, a little bit. But a lot of them, their balance sheet looks better too because they got a bunch of free money from the government or like low interest rate. ARKK, we were specifically talking about the ARK funds in the group today. I do give Cathie Wood a ton of flack. She obviously did well, coming out of the situation, going very concentrated on things like Tesla and Bitcoin and a couple other bets. So I do give her respect for that. I do talk a lot of trash, but in all actuality, exactly what I said happened was, the trade was great. She got famous for it, did well, and now the trade is garbage because just too much money rushes in and she makes too many poor decisions, and everybody either loses their money or doesn't make any money. But the fact of the matter is that if we look at where we're at right now, this is December 8th of 2020. So at this point in time, if you were in the ARKK fund, you just went sideways for the last like 8 months basically. You basically spent like 7 or 8 months and made no money. And that's what we were talking about. I said she hasn't made a good trade all year. It's not true. She's made some profitable investments or trades or whatever, but she also made some poor ones, like selling Apple at the bottom to buy a bunch of other crap that underperformed Apple. She bought a bunch of other things and said, this is the bottom. And then they sold off immediately much, much lower. So what is Cathie Wood's job at this point in time? She's basically a talking head that provides like liquidity to people wanting to dump on her face. So, but maybe she's into that stuff, But in all reality, do you want to like be in an actively traded fund that you have to pay like, fees for, and then you make no money while regular indexes go up 20%, 15%, 10%, or 8%, and you make no money at all, have to pay a percentage to her, and then you look like an idiot? It's not really my bag, but you can do whatever you want. ARKF, this one I think is slightly better. Overall, less bullish, but if you invested in this one on the 14th of January this year, you're at break even. So if you got in, like maybe like there was a couple days, there was like 2 weeks this year where you could be in profit. And if you bought, like let's say the 1st of January, hypothetically, I don't want to cherry pick here, but let's say on the 1st of January, you bought in to Cathie Wood's ARK F fund, you're up 6%. Nice. So oh wait, did I cut her short? I'm sorry, Cathie. I know you're probably listening. I apologize. I cut her a little short. Hang on. I want to make sure this is completely accurate. I don't want her giving me hell when she comes over later tonight, if you know what I'm saying. 6.39%. So she has underperformed all of the American stock indexes. Plus, you take off her, management fees as well. Oh, man. So, yeah, Cathie. At least she's up. Yay. Oh, Cathie. Oh, sweet Cathie. Square. Square not looking terrible, but, we got a high. We got a lower high. We got a potentially lower high. We'll have to see what happens. This tells me we probably are topping out. Don't see this every day. The knife literally comes from the bottom of the range all the way to the top of the range. Let's look at a similar situation where that happened and see what took place there. Well, it pretty much topped out. We did go slightly higher after that, but that was pretty much telling us, hey, this is probably the top. And that's what the knife is designed for. When you see these super violent moves like that, it tells you we're probably approaching the top or the bottom. And then the more violent, the more pointy, the more sharp the knife is, the more likely we are at the top or about to put in some sort of divergence reversal. So Square. But again, I would rather be invested in something like Square or PayPal, long run than a bank, because I think that, they're probably going to change the banking industry in general. eBay, still showing strength up here, back at all-time highs. I mean, look, let's be real here. eBay looks good. And, even if the world shuts back down again, eBay probably does good. If the world keeps rolling, eBay probably does good. The chart definitely looks good. Bullish pattern. Not surprised that we broke out here. I did not like that the support didn't hold right here. But if you took the continuation trade off of this as soon as we got the breakout, even if you bought the breakout initially, you did well. You're up a few percent already. I, again, did not take this trade because I didn't like that the support did not hold. But, still, look at that. eBay in the last 2 weeks overperformed Kathy. Man, she could take a page out of their book. PayPal back up here at all-time highs. Basically retesting. Again, nice trade, 17.69%. We did take profits here. It could easily just continue to new highs, though. I don't see any reason why it's not. I think, this basically is like sort of like our W pattern right here. So the measure move from the bottom of the W to the top of the W, has basically, that might be what the green arrow already is. No, there we go. So basically that was our measure move to the upside. So we have obviously a big W right here. We break out from the neckline. Oh, wait, maybe that, I don't know what, that might be the triangle. Break out from the neckline. We expect to retest the all-time high and possibly see continuation. We are seeing a little bit of weakness in the chart here, but honestly, I mean, this thing's just hanging out at all-time highs. There's only a couple things that the charts look this great on, and these are like the last few in a row here. Apple basically broke out from its all-time high, came back down, retest, and, looks like we're going to see continuation. It does look a little tired here on the daily, but, I mean, let's be real. I mean, fundamentally and technically, Apple is one of, if not the strongest stocks. Amazon, similar situation, broke out from the all-time high, came back down, retested it, holding as support. This thing went sideways from September 2020, and then broke out to an all-time high. So if this area holds, I would expect continuation. Again, these last few stocks we're looking at, the FANG stocks, Facebook, Apple, Amazon, Netflix, Google, with the exception of one or two of those, are essentially propping up the entire market. Facebook still looks good. I have no interest in being in Facebook. I was watching, what is it, Millennial Money the other day, and they were talking about, do you have like lines in the sand, things you won't invest in? And I definitely do. If I don't like the way someone does business, if I don't like the way something takes place, or whatever, I'm had no interest in investing in it. And that's how I feel about Michael's strategy. I'm sorry, Micro Sailor. No, that's not it either. Michael Saylor and MicroStrategy. The guy's a total bum. He's a piece of shit. He's a scammer. Don't like him. I would never invest in MicroStrategy. So Facebook is the same way. I don't like how Facebook does business. I have no interest in being invested in them. I don't really use Google either. But to tell you the truth, I mean, I have, it is what it is. You got to draw your line somewhere. You know what I mean? You have to draw your line somewhere. I would rather invest in something else. Is it going to stop me from making money on a chart? Depends how much conviction I have, either for or against their practices. So, I don't like how Coke does business, but I also don't drink Coke. But do I drink sometimes Coca-Cola products? Yes, I do. But do I want to invest in them actively? Not necessarily, because, just varying levels of conviction, I guess you could say. Alphabet, Google, back up at all-time highs, continuation, propping up the market, seeing some slight bearish divergence taking place. Is this thing going to sell off all of a sudden? Probably sometime in the near future. Is it going to just get bought up? Probably. It's definitely one of the strongest in the space. And then speaking of, basically doing nothing, Netflix, has essentially just been going sideways forever. I don't like the fundamentals of Netflix. I don't want to repeat like too much that I can't back up with numbers right off the bat, but I want to say overall that their earnings and forward projections are not particularly great. So while they did well during the pandemic, I don't see how they gain subscribers and market share over time. I think that they had their heyday. They did extremely well, when all of a sudden it went to lockdowns and everybody just, got their Netflix account or whatever. But do I think in the future more people get Netflix? Sure, probably. Do I think in the future that they gain market share? Probably not. I think, honestly, Netflix was in a position to benefit immediately from the situation. And then in the long run, they're just going to have more and more and more competition. So I think, honestly, they're going to lose market share. It's sort of the same way I feel about Tesla. Tesla will probably gain overall market share in the car industry over time, but they will probably lose market share in the EV space and battery space. That's my honest opinion, because they already have so much of it, and that all the big players are really getting involved. So while they were first to the party, I think that they're still going to be, at the party, having fun, doing well. But I think over time, other people are going to start taking away that market share. That's my honest opinion. So, basically Netflix going sideways. I mean, at this point in time, where are we at? We're back at July 2020. So if you bought this thing in July of 2020 and you never sold, it's literally gone sideways for one entire year. That sucks. That sucks. The trade, everything happened leading up to it. If you bought back in September 2019, you're up 100%. If you bought a year ago, you're like Kathy Wood style right here. So yeah, that's it for our tech and friends. So jump over and chat real quick. Oh, I see you guys are particularly chatty today. Good to see. Good to see. Let's do our cryptos, as I know you guys are super excited. Obviously, we saw our first bullish candle in a couple weeks. So daily CME futures, we were able to close back at or above the 8 moving average. We are inside the bearish control zone. Multiple green histograms above the slope line. It is still red. We are starting to see a little bit of life out of this situation. However, we are below the 200 exponential moving average. It is angled to the downside. We are below the 200 simple moving average, and it is still slightly angled to the upside. We are currently getting the death cross, which is the cross between the 50 simple moving average and the 200 simple moving average. And typically it's one of two things: either the absolute bottom of a sell-off, fake, and then we reclaim that area and continue to the upside, which happens probably about 30 to 60% of the time, or the other 30 to 60% of the time, or 40 to 60, whatever, is just a sign that we are going to enter into a long-term bearish downtrend. So which one will it be? I would say it's 50-50, honestly. It's 50-50. If you look back at the chart, how many times this happened and what happens afterwards, half the time it goes up, after that half time it goes down. I don't think it's a great, it's typically a pivot point in the market, but I don't think it's weighted one way or the other, because there's so many times where everybody gets bearish because they're, oh, it's a death cross, it's over, and then they reclaim that level, and then we see continuation to the upside, and then vice versa as well. Same thing with the golden cross. People will get extremely bullish at the golden cross and then will get rejected and go into a long-term bearish downtrend after that. So I don't really give much weight to that. I give more weight to the angle, to the slope of the 200 exponential and simple moving average. In this case, do I think we get a pushback up to that level? It's possible. 3,600, 36,000 is still in the cards. But overall, it still looks very bearish to me. Very bearish to me. We still are underneath the 821. They're across the downside. We have now closed a weekly candle under the 50 and 55. Simple and exponential moving average, and they look like they're about to start being angled to the downside. So our next target is still at 26.7. We're very clearly in the bearish control zone. We are very clearly seeing only red histograms on the TJD TDMACD. We have a red slope line as well. I see nothing bullish right now. We have gotten, a rejection of lower prices here, a rejection of lower prices here, a rejection of lower prices here, and every time we saw a continuation to the downside. So this slight rejection of lower prices here, does that make me overly bullish? No, not at all. Not at all. And we have consistent lower closes on the weekly. So I think more likely than not, we just see another lower close on the weekly. And then if we switch out to the monthly, close under the 8, more likely than not, we're headed down to 21. Hard sell signal leaving the bullish control zone. And the last 3 months, still have 9 days left in this month. CME futures days, not real days in real life, but stock market days. We have 3 red histograms in a row. Where are the bulls? Where are the bulls? Are they dead? Did they get speared? Are they hibernating? Are they already all in? Did they capitulate? I don't know. If you find them, let me know. I'm looking for them. I'm looking for the bulls. Let's go to the traditional Bitcoin chart, spot markets on Bitstamp. We have now a flat to no slope on the 200 simple moving average in dark blue. We have a clear downward slope on the 200 exponential moving average in bright blue. We have already had our, this is our death cross right here. And then this is our death cross right here on the exponential moving averages. Was that our low right at the death cross here? Maybe. We're closing daily lows. Let's talk about something bullish. It's not going to be easy. It's not going to be easy, guys, but I found something. I found something bullish. We did it. We have a low here. We have a low here, which is higher. And then we have potential to put in a third higher low. So we have a low, a higher low, a potential higher low here on the daily. We have a low here, a low here, a lower low, and then here a lower low again. We have 3 drives of potential bullish divergence. But, unfortunately, on these stochastics, we have a low here, then we have a higher low here, then we have a lower low here, and this lower low is lower than the first one. So we do not actually have any bullish divergence here. So we have one indicator in all existence that's slightly bullish for Bitcoin in an overall downtrend. I don't like that. So now let's talk about let's talk about short term. Let's look at our 4-hour. This is what we were discussing in the group today, what we were expecting to happen and how it played out perfectly and why we expected it to play out perfectly and what we expect to happen from this point. So we are paying attention to, let me go out to a longer time frame. Let's see what we have drawn on this chart. Is that the 236? Let me go back to a longer time frame really quick and see what's going on here. Okay, I think those were just random. Sometimes I just like to draw, and I don't know what it is. So I'll show you the secrets of the trade group, what we were discussing today, and why I'm currently short on the corn. All right, so we have our low here, December of 2018 or January, whatever, at $3,000. We have our high here at $64 million, $66 million. Oh, no, thousand, sorry. That's the other crypto channels that say 66 million. And then let's do from our CVD dump right here. Can you see that okay in red? So yeah, I'm going to leave that one in place. So we now have a white and a red 236 here. So now let's zoom in a little closer and we'll take a look at what we're paying attention to. So we have this, I'm going to delete this other red line so it's not confusing. So we have here basically the red 236 and the white 236, the 2 key levels that we would expect bots and algorithms to be bouncing off of. You can see here, we clearly found support on the white 236 in this area. We clearly found support on the red 236 in this area, support, resistance through here. And then now we came up, touched the red 236, and we're unable to close back above it. Depending on what time frame and how you draw it and which chart you're on, this has sort of already been a rejection in many ways. But what I'm paying attention to is I could pull up a different chart with some standy indicators on it. I don't really feel like doing it. Yeah, let's just, yeah, whatever. Should I do it? Hang on one second. I guess I'll go through the trouble. We're here. I'll show you guys my secrets. Hang on, hang on. Okay, okay. Don't tell anybody I showed you this. No, I'm just kidding. But yeah, basically, let's go ahead and delete some of this other stuff just to kind of clean it up a little bit. This was our dueling channels. I spoke about this previously as well. We basically have two channels taking place. I'm going to get rid of the descending triangle. So we have essentially a blue channel right here. And then inside that blue channel, price action has been bouncing around, getting rejected, finding support at the heart line. And then we have basically broken down from that channel at this point in time. And then we have a second channel, which is our descending channel, which is typically a continuation pattern. And very clearly we have one stab up out of it, but have basically been operating inside of it. So we broke down from the one channel. Everyone got extremely bearish. We did not, because we expect a retest of that area. We are obviously still inside of our yellow channel as well. And then if we just sort of ignore both those for a moment here, and we pay attention to what's taking place on this chart with our traditional indicators. And I do like to use these because this is what many people use. So while I have my own versions of my indicators, which I like because they're easy to read, easy to use, and they work extremely well, I also like to use traditional indicators because many people look at them. So it helps obviously to look at them as well. So, but here we have basically on the 4 hour, we saw there's definitely some bullish divergence taking place on our longer time frames potentially. But we're seeing what now, looks like bearish divergence to me. So I'm going to point out to you, matter of fact, I'm going to delete all this stuff so it's extremely clear what we're looking at and paying attention to. Perfect. Okay, so now we basically have, I'm just going to leave that, but just ignore that red line there. So now we basically have just what's taking place currently. So what we're paying attention to is our different indicator oscillators. We have various things taking place here on our MACD. So here we have a tiny little drive up on the MACD here and a tiny little drive up on the MACD here. Here we have a medium one, and then here we have a large one. And then if we look at how those correspond on price action, we basically have this point here on the MACD. We have a lower point right here on the MACD, and then we have a third point right here. So as this was developing, what we were paying attention to was, do we invalidate these points? So we have initially a close, and this is all these indicator oscillators are based on the close, the candle close on whatever time frame you're looking at. So wicks are ignored for drawing in the indicator oscillator, so they should be ignored for charting as well. A lot of people do not know that or do that, but that is a fact. It's not subjective. If you're using something that's calculated based on a candle close, you should be paying attention to candle closes. So if this is essentially, and again, this is just something I was specifically looking at in the group to play out for my entry into a short position. But basically, we have 3 points that we're paying attention to here. And this was while this candle was still developing. I was paying attention to this and potentially getting ready to enter my short. And this could still be invalidated for sure. It could 100% still be invalidated. And that's what stop losses are for. And that's why it's important to, actively manage positions and have clear, definable invalidation levels. But if we just pay attention to these 3 points, and then we can see why they're so important. We have and I'm color coding them just so it makes it nice and clear and easy. And then we can see how it plays out. So here we have a high, it's a green. We have a lower high, it's yellow. We have what needs to close below this yellow line here, which obviously it looked very bullish, like we we're going to invalidate that bearish divergence, but I did not think that was going to be the case. So we have a high, we have a lower high, then we have a short squeeze, lower high once again, and here we have a high, we have a much higher high, and a much higher high on the MACD. So now let's look at our next indicator oscillator. So here we have a high here on the stochastics, and then here we have a higher high on the stochastics, but we have once again a lower high on price action. And then here we have a third and final higher high on our stochastics, but very clearly a much lower or same or lower high on price action. So once again, a high, a higher high, a higher high, a high, a lower high, the same or lower high once again. You could call this a lower high. It is very clearly a lower high. If you super look at it and zoom in, it's like a couple dollars short. If you're not sure, you can use our tool right here, which if we look up at while we have our clicker right here, if you pay attention to the top left corner right here, it actually gives you those. So if you want to be really, really sure about something, you can see the high on the candle close here. I'm sorry, the close on the candle here was 32,169. And you can see the close on the candle here was 32,138. So it's $30 off on a $30,000 asset. So in my opinion, considered to be the same high. But the point is, and the whole reason we're looking at this is because we have very clearly on both these oscillators a low and a high. We have a midpoint and a midpoint. So high, then lower high, high, then higher high, high, then higher high. And then here we have a high, lower high, or same high, high, higher high, and then higher high very clearly. So that's 3 drives of bearish divergence. We are in a very clearly bearish downtrend. Therefore, you would expect bearish divergence to play out with much more power and continuation than bullish divergence. And then finally, last but not least, let's look at the relative strength index, or the RSI, as some people like to abbreviate it. And you'll see once again that the same exact 3 points are present, and the same trend is present as well amongst those 3 points. And what does that tell us? Tells us we have triple confluence on triple bearish divergence in an overall bearish downtrend after a short squeeze move to try to reclaim a very clear, very clear what was previously support, turn, resistance. And if we still had our fibs in place, you would see pretty clearly that this level here and where we're getting rejected at is essentially a key Fibonacci level. So yeah, it looks like basically we're breaking down from a descending triangle. We reclaimed it multiple times in a row. Here we broke down and got lower closes. We came back up to retest it as resistance. After we retest it as resistance, what do we expect to happen? We expect continuation in the direction of the predominant trend. If in fact this should fail, which point in time our descending triangle would give us a potential target move of or as my group member likes to say, look out below. 23,000. Could we stop at 24 or 26,000? Yeah, we very clearly could. But the fact of the matter is that this does not look like bullish price actions to me. This looks like how you get a bunch of moon boy idiots to get bullish on something, and then you just short and dump directly on their faces. Is it possible we break out to the upside? 100%. 100%. I'm not always right, but I know that more often than not, bearish divergence in the direction of the predominant trend plays out. So I'll take my chances. But yeah, so, could we easily invalidate this level by coming up and getting a close above this point right here, above 32,189 roughly? Yes, we 100% could. But does this rejection candle, let's move this out of the way so we can see this ugly candle. Does this candle right here Let's circle it. Let's highlight it. Let's make sure everybody knows what we're talking about. Does this look like a bullish candle to everyone? This, we pumped way up. We got rejected hard. And now it looks like a gravestone doji or a shooting star or a hard rejection, hard pass of price action to the upside. That looks very, very bearish to me. So now let's compare that to our bullish candle pattern that we have here. Let's look at these rejections. These are rejections of lower prices. How do they look? Let's go lower. I don't think so. 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 Let's go higher. Yay! Rejected. That's how I look at this. If there is a top, it's typically going to get rejected violently in a single candle. If there is a bottom, it's likely going to get rejected violently in a single candle. Do I think that this is going to end up being the bottom? No. I really don't think that we just hung out at the low for 4, 8, 12, 16, 20, 24. I don't think we spent a whole day just hanging out at the low while no one was buying so that we could pump to the upside and then go to $2 million. It just doesn't make sense to me. This to me looks like a low that would see continuation. What does this look like? Let's look at this. Let's compare some candles. Let's go to the schoolhouse. See if it rocks. Look at that guy right there. Now that's a rejection. That's how you rejected price action to the downside. But boom, thicky wicky on the bottom, green candle body, continuation. Let's go. That's what we want to see. Okay? That looks good to me. That's a buy. Don't hang out at the bottom of the range for more than a couple minutes. Okay? Let's look at another one. Let's see if there's anything else kind of telling us that. This one right here, we have bearish move. We have a nice green thick candle, and then we try to sell back off. And again, a nice rejection, and then continuation once we take out that point. That looks pretty bullish to me as well. That looks pretty bullish. Let's look at this one. Massive wick at the bottom, gets completely bought up. You know, completely bought up. I mean, this is a 24% wick that gets bought up. You know, this is obviously just a stop run and then gets completely bought up and then still doesn't even have follow through after that. Comes back down and retests it. So, you know, the likelihood that this is just going to be our low and that was it, I don't know, guys. You know, here we got a real nice example of what a low looks like. Here we've got, you know, a V-shaped recovery. We're going to the moon. Hooray. Bitcoin is the future. Probably not. How about no, Scott? Maybe I'm wrong though, but I don't know. According to the bearish divergence and previous history, I would say more likely than not, this was in fact a failed short squeeze or a successful short squeeze, and that we will now see continuation to the downside. But I will tell you on Sunday whether or not I was right or wrong and where I took profits or my stop loss was hit. So yeah. But regardless, you know, I'm trading based on a measurable, repeatable, you know, successful pattern. I'm looking at something that thousands or millions or billions of other people around the earth are also looking at. Probably not billions. You know, we're seeing very clear divergence on all three of our traditional indicators and price action. Therefore, the likelihood of someone else also seeing this, the likelihood of this situation playing out is much more likely than if I'm using some fancy indicator or I'm hoping or wishing or even flipping a coin. I would say more likely than not. Now, if we had divergence on two of these oscillators, but not the third or something like that, I would say, well, maybe it's not going to play out. But typically, 3 drives of bearish divergence on your MACD, your stochastics, and your RSI typically plays out. And then also the final factor is we're very clearly in a descending, you know, pattern. We're very clearly in a downtrend. Therefore, if we have bearish divergence, I would expect it to be more likely. Whoa, bro. Where'd my other arrow go? Anybody else notice that? Did I delete it? Okay, well, who cares? More than likely, you know, essentially, oh yeah, I did. I deleted it a while ago. I just noticed it was gone. I thought TradingView was at it again. You know, because it's in the direction of the predominant trend, what is it telling us? It's telling us that this bearish divergence will likely play out, and then we'll see continuation of the downtrend. So if it was bullish divergence like we're seeing on the daily, while there's potential for it to play out, it's much less reliable. It's more likely than not going to underperform if it does play out, as where the bearish divergence is more likely to play out. Is there still a high likelihood that this trade fails? Definitely is, for sure. And did I take any scalps off of some of the other trash bag coins in the space, off of the lows here? I definitely did. I didn't see a good setup on Bitcoin, honestly, though. It looked, honestly, to me like there was a high likelihood we could get rejected, basically, at, I think it was the 30,675 level. So if you looked at the, basically, I'll show you what the trade setup I was looking at was. I was basically looking at this as realistically there was too high a likelihood that something like this was going to play out, where basically I would have to have a 3 to 4% stop loss, even if you just set a wick down, but that's how you get taken out. But I was looking at basically like a 3 to 4% stop loss, something like that. And I was looking at the potential retest of this area right here, the 30,675 level. And that basically left me with a 4% potential move to the upside and 3.4% to the downside, which is basically a 1-to-1, which is not high enough for me to take it. Did we end up getting better than that? If I knew for sure this was what was going to happen, it would be like more like a 3 or 4% stop loss to the downside with an 8% move to the upside. So that's like a 2-to-1 trade setup. That's worth taking. But I honestly, after so much weakness in crypto, after so much weakness in Bitcoin, after the bulls basically just getting like killed and skinned alive, and all their like wives and children, all their little bull babies getting murdered too, I just didn't seem that likely. Didn't seem like it had that high of a probability to play out. In hindsight, would this 8% on Bitcoin be good? Yeah, but I mean, I traded something stupid like Doggy Coin, and it was like almost a 20% move. So I would much rather go with some trash bag coin like that. Or I think the other one we charted out was Matic, which just got added to Kraken. And then the final one, which I did not trade, was KuCoin. And that one had a nice move as well. And there's a bunch of other, like, trash bag cryptos that had good moves too. But essentially that's what I'm looking at. That's my rationale behind it. That's a little deep dive into the short-term action and what we look at and work out in the group in real time. And, essentially why I was not really interested in a trade to the upside, nor would I really look to trade against the predominant trend, which is very clearly to the downside. So let's switch over to Ethereum next. Ethereum had a decent move too. I think it did like 10%. Oh, won't tell me anymore because it's a new day. But yeah, basically Ethereum has a low, has a lower low, and then now we have a third lower low. We have a high, we have a lower high, and then we have a third lower high. I'm seeing nothing really bullish from Ethereum. We are inside the bearish control zone. Looks like it's trying to roll up here. Got a little blue line, blue slope line here. Looks like it's trying to do something. If it can get above the 200 exponential and simple moving average, there's definitely potential. But, the 821 is about to cross the downside. Is it likely to me that we get up to 2139 on Ethereum? Definitely possible we try to stop this flip from happening. Definitely seems likely. But we also have sell by sell, leaving the bullish control zone, all red histograms, well below the slope line in the bearish control zone, and not a single green histogram on the weekly or on the weekly. There's just so much weakness in the space right now. Again, I'm just going to take the easy trades. I'm not going to go for some hard trade like this. Oh, and look, of course, it just got completely rejected. So, that's why it's best to just take profit and not expect the measure move break of the channel. If this would have held, you would expect to get the move back up to like 27 cents. Doge was just an easy trade off of this rejection of lower prices. I want to say it was like 17.5 cents or something like that, 18 cents maybe to 20 cents, roughly. But it was a 20% move to the upside, quick, in a single candle, in one day. Hooray! I mean, this would have been a nice scalp trade, but I didn't expect that to happen. But by this candle right here, told me we were probably going to reject lower prices. Bitcoin price action told me we were probably going to reject lower prices. The likelihood of getting the bullish cross to the upside told me we were probably going to get something. Do we see continuation on this? Well, I think if we hold long enough outside this range, there's a possibility we break to the upside, but there's also a possibility that there's something like this taking place. And then if you go from like some of these different lows, just slightly different, which again, I don't like to adjust my stuff all the time, but just to kind of show you, this one doesn't quite touch the bottom. We got a bottom, a bottom, a bottom right here. You know, did we basically just get rejected at the top, close outside of it, and then this is just going to leave behind a wick and we're going to get rejected? I think that's probably what's going to happen. But, you know, again, a quick little cha-ching and on to the next. Polka dot looks extremely weak. Low, lower, low, lower, low. Trying to do something here. But again, I would expect all these things to underperform. This thing has now a 200 exponential and simple to the downside, 821 cross on the weekly. Chain link, 200 exponential and simple curling over to the downside. Again, push back up. Couldn't even get above the 8 moving average. Trying to show some strength here, but all cryptos look the same. Some just look worse. Some look better, but they're all ugly. Uniswap, again, 200 exponential to the downside, 200 simple, still kind of angled to the upside. Seeing a little bit of strength here. Seeing a low, a lower low, a lower low, a low, a higher low, a higher low. Seeing some potential triple bullish divergence on Uniswap after it's sold off pretty violently. But again, it lost a key support level here. And now what is it doing? It's just retesting that support as resistance. So if it can't reclaim this level and consolidate above it and get follow through, I would expect it to get rejected and smash to the downside. Bitcoin dominance, having trouble getting above the 8, but overall this on the weekly, hard buy signal, multiple green histograms in a row. Looks like we're getting continuation to the upside. Every other time we have gotten this exact signal, take place, we basically got 23% Bitcoin dominance move. This one sold off slightly lower, but then got, essentially a 40%, or if you just go to the top, 66% Bitcoin dominance move. If you go from this one here, we got a 30% Bitcoin dominance move. If we go from, you guys get the point here, 20% Bitcoin dominance move. So more likely than not, I think from this hard buy signal here, we're probably going to get a 20+% Bitcoin dominance move, taking us up to 55 Bitcoins per dominance. So Bitcoin will be 55% of the market cap. Speaking of market cap, we got the exact move down to the 55 exponential. Did not quite touch the 50 simple moving average. We did get the 821 cross on this. Anyone looking at crypto market cap with even half a brain can tell that this is extremely bearish. We were putting in consistently weaker lower lows on Bitcoin, on crypto market cap. We have an 821 cross to the downside. If you bought into Bitcoin crypto market cap back in the day, it's a 637% move for the value of cryptocurrencies as a whole. If you're not happy with 637%, move to the upside in your overall crypto market cap, I don't know what to tell you. You got to be better. I don't know. Looks terrible. All red histograms. Red slope line has flipped over now. We're well below it. We're inside the bearish control zone. Got the hard sell signal. We got the 821 across the downside. Crypto looks extremely bad right now. So, why I'm not putting a ton of weight on the daily bullish divergence potentially playing out. And I think it's more probable that the 4-hour bearish divergence plays out. And, both could play out. The 4-hour bearish divergence could play out. We get a nice move, take some profits on our shorts, and then, pull back off the shorts and then be like spot long again, and then essentially, ride that back up to the upside. And then we're just looking to sell rips. We're not really looking to buy dips. We're looking to sell rips. We're in a clear downtrend. In a downtrend, you want to sell the rip. In a clear uptrend, you want to buy the dip. Same way we were looking at the stock market earlier, and we said if we're always in the bullish control zone, you want to buy. When we go into the bearish control zone, you want to buy the dip. The same way that right now, we're very clearly in a bearish downtrend on crypto, so we want to sell the rip or sell when we get inside of the bullish control zone, because the majority of the time, the bears are in control. So here we have Coinbase. Coinbase did exactly what we said, came back down, retested the bottom of the range. I have no interest in being in Coinbase right now. This looks extremely weak. All we have done is literally sell off, and now we're hanging out at the bottom of the range again. We got a slight move up, slight little gap up, little rejection, a couple percent. Yeah, sure. But I think there's a very, very high possibility this goes under $200. We could see the move up to the 618 at 325, but at this point in time, I'm seeing no strength from this at all. Literally like no strength. It looks terrible. Riot blockchain, it's same type of thing. We are technically putting in a higher low right here. So is it going to find some strength and move up? Yeah, if Bitcoin does, but why not just trade Bitcoin, in my opinion? MicroStrategy, Michael Snailer, Michael the Failure. Yeah, it looks terrible. Went parabolic to 1276. It's at 556 now. This is probably I mean, I can't think of much that's in a worse position than this. From its high to its current price action, it's still down 57%. There's not a lot of stuff that's in a worse shape than Michael Snaler. So, he claims that he has $2.7 billion in Bitcoin. It's probably like, I don't know what it's worth at this point in time, but he's barely positive. I think he's up probably about 15 to 20% over his total price for all the coins he bought. You know, like somebody's mentioned earlier, he's probably not sweating quite as bad right now, but from being up 500% on your initial investment to being up 15 to 20% on your current investment, that's how people get wrecked. They keep buying and they buy more and more and more at higher and higher prices, and they start getting greedy, and then they lever up their position. They start borrowing money, and then, next thing you know, they go negative and they give back all the games. They have no profits, and then eventually, they have to fake their own death and steal all your crypto coins and run away with them. GME, GameStonk, obviously got the 821 across the downside, did exactly what we said, hit our target perfectly. I still expect this thing to have further downside. It was obviously very oversold. Came back up, trying to get back above the 821. It is definitely possible this thing bursts back to the upside, but I would expect it to just put in another in a series of lower highs. Meme stocks definitely saw a little action, inverse to actual markets. AMC, same thing. Came down here, hit our target perfectly. The 89 moving average at $31.26. Then got a nice, powerful move to the upside. In between the 8 and 21, getting rejected. Pretty bearish looking candle right here. I would expect probably, this thing is so oversold at this point in time. We're in the bearish control zone, but it looks like it's going to try to make another pushback up to the upside. I do not expect it to get above $58, but it's another 50% to the upside. Does it look more likely to go up or down from here? I don't know. Ask Reddit. I don't know. They must have got some drops for their pink eye, drank a little water. They're back in the game. The apes are hydrated. They got their diamond hands back, and they're throwing poo again. Bed Bath & Beyond, broke down from our key little triangle here. Support, come back up, try to test it. I expect it will act as resistance, and we'll break back down. I imagine this is going to go back down to 23.75 at some point in time. Again, looks like we're about to get the hard buy signal. Last time I got one of these parabolic rejection candles. I think there's a high probability we get a nice move back up, maybe to like $36, another 20% little move up here. But I suspect it probably gets rejected or just straight up dumped on right afterwards. So 20% on Bed Bath & Beyond, but you better take those profits. DraftKings breaking back up, trying to get above the 200 exponential. 200 simple and exponential are both sloped to the downside. Looks terrible. Looks like we're going to see continuation to the downside. We switch to a longer time frame. We're very clearly below key moving averages. We're very clearly below the 821. They have crossed to the downside. We came back down, put in a lower low. We have a high. We have a low. We have a lower high. We have a lower low. We're seeing a bullish attempt to reclaim those levels. I expect that we'll probably be down at $36 very soon. We did get the hard buy signal, showing a little bit of life. Nice little bullish candle there. But how about no? Probably not. And Newegg, the last of the meme stocks, basically had a parabolic move to the upside, came back down, touched the 21 moving average, touched the top of the previous candle. We expected to act as support. Moved up, sold that back off all the way. I would expect our next target to play out and eventually be back down here. Eventually we'll take out this next candle and we'll be right back down at like $19.50. And then after that, the next level is $16.76, $17. The meme stocks they're meant to just be pump and dumps. That's all there is to it. It's a pump and dump scheme. It's just technically legal. It's not quite as illegal because it's people on Reddit doing meme stuff. I don't know. It is what it is. I think probably in the future, they're going to go after a bunch of these people. They're going to shut down a bunch of these groups. You draw too much attention from the SEC, and it's not fun for anyone. The IRS and the SEC and probably the markets themselves will sort all this out in due time. I assure you that. XAU, gold. We were unable to get the 821 cross back to the upside, unable to reclaim the 200 exponential and 200 simple moving average. They now both have, basically clear slope to the downside or flat/downside slopes. Gold's going much lower. we're at least going to retest the bottom of the range. We failed to hold the 821 cross. We did the exact same thing here. We got the cross to the downside, tried to save it, continued to lower. Cross to the upside, cross to the downside, tried to save it. I would expect this to continue much lower. You know, this is, I overlaid, can't remember if I did this in a video or just for fun, but I basically just overlaid the price action from the previous top, the previous gold top on here, and it looks very similar. We basically sell off, you know, sell off, put in essentially a descending triangle, try to break out to the upside, and then it fails and it goes much, much lower. You know, I mean, that's this just overlaid. I literally just took this and I went like that. So is it going to do that? I don't know. Maybe not. Is that going to be from the bottom right here? This is our Fibonacci to the top right here. It comes down perfectly to the 886, to the 786 right here. You know, find some support at the 618 right here. Find some support at the 0.5. I don't know. It looks awful good to me. Does it come back up exactly to 0.5 and get rejected? And then essentially puts in a inverse head and shoulders, which if you're around back here at the 1300 level and the ascending triangle, you got in on that one because that was the last trade that I called out on gold. And from when that trade played out till the top, it was over 50% to the upside on gold. So yeah, maybe that'll happen again exactly. Maybe it won't, but I sure don't like how it looks. Yeah, I mean, you know, and the inflation, there's still inflation fears, but I think the inflation trade is basically like over now. People are like thinking, oh, wait, maybe the Fed is right. Maybe the transitory inflation. Transitory. I love how many people try to say transitory and can't even pronounce it. It's like cracks me up. I'm like, yo, no one's taking advice from me if you can't even say the word transitory. They're like, it's transpiratory. It's Tyrannosaurus Rex. I'm like, no, that's a dinosaur. Nope, incorrect. Let's look at the old silver bullet, the old werewolf hunter. You know, giant triangle. You know, finally lost this whole entire time. It was finding support on the 200 exponential, then here on the 200 simple exponential, then it lost the 200 simple, and now it's losing the 200 exponential. The slope of the 200 exponential is flat. The slope of the 200 simple is flat. We are below both of them. Silver is going lower. It's going lower. I think $24 is in silver's near future. After that, $22. The premiums are still high. They're coming down some, but now you'll notice all of a sudden, all these dealers, all these shillers, all these middlemen are trying to sell their 1,000-ounce bars for $1.79 over spot. Oh, all of a sudden, silver's coming back online? I thought there was a shortage, guy. Hey, guy, would you? Oh, you speculated on silver, but you're a dealer, so you bought it at the top and tried to charge too much money, and people weren't buying it from you, and now you're going to take a loss on your silver? Oh, okay. Thought you were a middleman. Thought you were a business, not a speculator, bro. You heard me. You know who I'm talking about, silver guys. The old Gorilla Silver guys. The old silverbacks, that's it. XAU, XAG, doing exactly what we said. It's strengthening to the upside. Silver is going to lose buying power in comparison to gold. I expect us to get up to 90, well, somewhere in between 80 and 90 silvers per gold, maybe even as high as 100. We are in a positive uptrend, very clear uptrend. Found support, exactly like we said. Getting the break of the descending triangle, measure move, inbound, and then after that, at some point in time, I expect us to top out and go much, much lower, and then all of a sudden, silvers are going to dominate. How long is that going to take? Probably a couple of years. Probably a couple of years. At least one. Fatty Platty, tried real hard to get back up here. Platinum is breaking down below the 200 exponential on simple. Slope is rolling over, getting rejected here. This looks absolutely terrible, but I like that. I like that it looks terrible. Got the cross back here in July at $800. Got all the way up to $1,300, and then got the cross back here at $1,150. And in case you're wondering why these crosses matter, look, as soon as the cross was threatened and we closed below the 21, we immediately just got a big thick sell-off, retested it, failed, rejection candle, rejection candle, and then continuation. I think probably we'll be able to get this for under $1,000 very soon. Very bearish on the weekly. I like platinum though. Let's look at the mining stocks. AG, First Majestic, broke down to a new low as expected. It's trying to put in a bottom here, trying to put in divergence signal here. Look, you know, people are saying, oh, the mining stocks have already sold off a lot. They're not going to sell off anymore. If gold and silver start selling off violently to the downside, these mining stocks are going to get decimated. Next question. Tilray, pot stocks. Look, new low on the cycle here for Tilray. Since it's a little high back here, I don't like it. I don't like these pot stocks right now. We're at areas where we could likely see a bounce, but you know, we have a high, we have a lower high, we have a lower high. I expect us to just put in another lower high. Is there a trade to be had? Could we get a 33% move to the upside? For sure. But to me, it's a scalp trade, and it should be quick and easy, in and out. That's what she said. Am I right? But seriously, though, pot stocks are underperformers, so I would expect them to continue underperforming. ACB, same thing. Back here, retesting the low. Is it possible we're still putting in this giant descending inverted head and shoulders? Yes, there is. Look, I just don't like how these pot stocks look. Definitely looks like it's going to get some kind of move to the upside, possibly. But if we look at the weekly here, you know, we went into an 821 cross back here to the downside in July of 2019. From that point in time, we lost, you know, what, to the bottom here, 96% of its value. I don't think that's right. Is that right? It must be. I mean, look, it's hard to argue. This thing's basically at zero. It's hard to argue there's not some kind of value in here. But I mean, I don't know. We're at like support where I would expect here, putting in a potential inverted head and shoulders. I mean, I don't know. How much lower is it going to go? If it goes to $5, would I be mad? No, I would be a buyer. But that's still 30% down. I don't know. We'll see. You know, we failed to cross the 821 back to the upside. Looks like we're just going to keep going down. We're trying to put in some bullish price action here. Looks like we're about to lose the blue slope line. You know, if we do, this thing's just going to roll back over. Stokes are rolling over. Looks bad. But assets are always darkest before the dawn. Canopy Growth looks worse. URA, Uranium Energy Corp. No. Global Uranium ETF. Still love uranium long term, but not short term. You know, maybe for a little scalpy scalp up here. Again, in the bearish control zone. In the bearish control zone. Showing a little bit of love off the 200 exponential. 821 have crossed the downside. It looks like we're probably going to come up here to like $20 and get rejected. We'll see. UEC, same thing. Well below 200 exponential. Or below 200 exponential. 200 simple. 821 crossed the downside. Trying to save it. Getting the hard buy signal. Coming out of the bearish control zone. Could we see continuation? We could, but again, I mean, these things are starting to look bad on like weekly time frames. You know, we're getting 821 across the downside. I would expect like the $1.50 area to hold, but I mean, there's no reason we can't go back there. No reason. CCJ, Cameco, Royalty, Uranium. Broke down from key levels. I would expect this continuation. Looks like we're getting the breakdown, you know, retest, and then I would expect continuation. It's possible we go higher from here, but none of these charts look particularly great. Copper trade, overcrowded, breakdown, holding support for now, but I think we're down at $24 or $22 very soon. That's the CPER ETF, actually ETV index fund. Lithium. This LIT, Lithium Battery Corp. One of the strongest charts that's out there, fundamentally and technically. You know, strong arguments to be made for lithium and batteries and stuff. Yeah, retesting the high right there. Strong. We'll see. It's at very high levels, but could easily see continuation to the upside. Lumber, you know, it looks like we're bottoming out here at the 886 of this entire move back up here. But are we bottoming out permanently, or are we just going to do this? Where we just come up and then just dump? If we take out this low right here, you know, what's our next low? Well, we have to start like looking back basically at our previous swing low. And then we start looking back here as our fib target. And then we start looking from there to there. And, you know, essentially, do we see interactions taking place that look reliable, that look realistic? Let's clean up this chart a little bit and see. Does it look like maybe the algos are paying attention to this chart? I mean, it really does to me. We saw some resistance through here, resistance support, you know, resistance support, resistance, resistance, support. Like we see gaps around those key levels. So there's definitely something going on. So obviously this is topped out, put in a lower high, put in some clear, signs that we're going to be dumping here. Could not get back above the key level, which falls into line with the 382, at which point in time we sold off to the 618 perfectly. I would say this is probably the Fibonacci we're paying attention to. Does it go lower from here? Maybe. If it does, it goes to $379 lumber futures. Does it go higher from here? Probably. If it does, where does it go? 662, maybe back up to 826. I doubt it though. There's probably so much lumber just sitting around that people overpaid for. Again, perfect example, just like the silver industry, why if you're a middleman on something, you shouldn't be speculating on price. You should just be making your cut, not being a greedy fucker. And that's what people did with lumber, and that's what people did with silver, and now they're going to get stuck holding the bag. You're going to see huge companies that are middlemen, distributors, like online retailers, whatever, that are stuck holding bags. Pawn shops, all kinds of people stuck holding bags upside down in positions because instead of just making their regular cut, they got greedy and tried to speculate and were wrong. So there's a reason you're not a trader. You are a pawn shop. You are a middleman. You are a online silver retailer. You are a lumber yard. Don't speculate. Caterpillar breaking down from a key trend. This is what potentially the S&P might be doing. Most of the like industrials, heavy equipment, etc. charts look very similar to this, including John Deere and Company. Same thing. Same thing. Broke down. I would expect continuation. This is holding strong for now. Antero Midstream Corporation. This got a nice bounce back up, but I mean, this should be sold into, in my opinion. Could we see continuation to the upside? Maybe, but I don't know. I think we're going to run into some serious resistance around this area. I would rather be out of this position, let it chop around for a while, reset, bullish reset, see if it pulls back, and then get back into it from a lower level. Or when we start to see strength or consolidation at essentially like this. I am still in a position right now, but I have been trimming. Anything I'm still in at this point in time, I'm basically trimming, with the exception of enough names I can count on one hand. Cemex, this is exactly what we were expecting. The channel broke. We came down from it. We're retesting it. I would expect a lower high. If we get back inside the channel, maybe I'll get bullish again. But the truth is, I'm still in a position on this, and I'm trimming. We'll see what happens on this. But again, I don't like any of this price action. I'm not greedy like that. When you do well with trades, you stop getting greedy over like a couple percent here and there. You start looking for the easy trades and not just, hoping stuff just goes to new all-time highs all the time, especially when the charts are telling you otherwise. Cleveland Cliffs, this is that steel company. One of the members likes this one. I actually like it too, long-term. Definitely has some potential. Looked into the actual financials on it and everything. Looks great. Definitely fundamental and technically strong, but the chart does not look so great right now. Could we easily see a situation like this in continuation to the upside? Yes, we definitely could, but I more expect this to come back up, sell into, and then sell back off to one of these key levels, key Fibonacci's from the bottom of this move to the top of the move. We could easily still see new cycle highs on this thing, but we're at key levels. This white Fibonacci is where I expect a strong rejection, which just so happens to be where we came back up to. And if we look at our longer term chart, this is the one that we put together in the group. This is essentially, the 618 of the macro. If we go back to the all-time high, we go back to the all-time low. It initially sold off to the 0.5, came back up, put in a lower high, came down to the low. Then you can identify that was actually the 0.5 of the move, at which point in time we came all the way back up to the 0.5, retest what was support as resistance, fails, comes back down, puts in a higher low, comes back up to the next key fib level after the 0.5, that's the 618. I would expect this to get rejected, come back down, potentially find support at the $12.50 level, at which point in time we could have a low, a higher low, a third higher low, maybe even the 382. But I think this area would probably at least hold for some time, at which point in time we could either put in a new high or a lower high. But overall, I think downward pressure on this one. There's a lot of downward pressure on this. And then last but not least for today, Ford. This thing has somehow managed to stay inside of this channel. It's hard for me to stay bullish on Ford. My position is substantially up on this, but I'm not going to lie. Like every day I think, what am I doing right now? They like have to shut down factories because they don't have enough chips. They're like everything possibly that you could think of that's going wrong with Ford seems like it's going wrong with Ford, and yet somehow it's staying strong. It's staying above this key fib level, the 236. We'll see. I'm literally a button click away from getting out of this position at any point in time. I mean, we have found support continually at the bottom of the range here. That gap down, the only thing that kept me in this trade is how bullish this candle looked right here. And then, of course, a nice bullish follow through. But I think it's probably a wrap for the old Ford for me, guys. I'm not looking for my position to be found on road dead. So I think more likely than not, this is the situation we're looking for. So probably going to be out like trout on the old Ford Motor Corp company, whatever it is. But yeah, I think that's it for today. Ladies and gentlemen, aka gentlemen and more gentlemen, hope everybody enjoyed the technical analysis today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Peter, good to see you over there, my man. More rolling hills of selling. Yes, sir, correct. If you are in the chat and you have not liked this video, please do so. Make sure you subscribe to the channel, although I'm sure you guys are already subscribers because you wouldn't be here probably otherwise. Definitely appreciate all the positivity, all the good people out there, all the requests, all the positive interactions, and all the questions, all the group teamwork and whatnot. I appreciate everybody that supports the channel by being a part of the group. I hope you guys are enjoying it. If you're watching this later on and you have any interest or now in being part of the group, please let me know. You're more than welcome. There's always available space, at least for now. Appreciate everyone. Hope everyone has a good week, and I will see you on Sunday for our next market update, the weekly look ahead. There is definitely some serious potential for lower highs to be put in a lot of these markets. Obviously, crypto is literally putting in lower highs every day. But as far as traditional markets, definitely some potential for lower highs to be put in and continued selling. I do like the bullish price action that we saw, but I suspect that the buy the dip scenario will only work for so long. But it has been working for some time, so most people that have been buying the dip been doing quite well. I think the most important things to pay attention to are the 10-year yield and what kind of strength it shows, the DXY dollar index and what kind of strength it shows. I do expect both of them long term to head to the upside, but we could easily see continued downside. Pressure on interest rates, pressure on the dollar will probably lead to higher asset prices or speculative asset prices and whatnot. But gold and silver and all the precious metals, all the inflation trade does not look so hot. Bonds are still looking okay for now, but I suspect that probably the yields will take over. I think the 0.5 retracement was a key level, and we will probably see some sort of sideways chop or continuation back to the upside, at which point in time things will be changing. And I think it's just a matter of time before the DXY breaks out of the bullish pattern that it's in, cuts through that neckline, and we see a parabolic move on that. If you didn't check out the previous live stream from Sunday, I highly recommend you check that one out. There are some very, very important things at the beginning of that video, some important targets on the DXY, and then also talk about Bitcoin and how we extrapolated the future price targets, as well as how Fibonacci levels can be anticipated using basically look ahead. Rather than just Fibonacci extension targets and Fibonacci retracements, you can often find what targets the bots and algorithms have in place before they even get there. But with that being said, I appreciate everyone. Appreciate all the love out there, guys. Love y'all. Keep it real. Protect your principal. Lock in those profits. Take care of your family. Treat each other with respect. Spend some time with the old fam. Get out of the house. Don't watch TV all the time. Make sure that you are growing yourself as a person. Make sure you are investing in yourself, in your education. Buy a book and read it, when you're in the bathroom or whatever. Find time. Don't just read articles. Don't just look at CoinMarketCap or TradingView all day. Educate yourself. Even though we are in a bear market, technically, bear markets are the best time to learn. And that way, when the bull market arises, you can make sure that you lock in those profits, make sure those gains, identify the predominant trend, trade with the trend. And yeah, I think that's going to be it for today. Appreciate you all. Take care of yourselves. Thank you all for the support. Thank you for everyone that is in the group and shows their support. That way, you guys make what I'm doing here possible. Otherwise, I would probably just be lazy and you would never hear from me again. No, that's not true. I actually do really enjoy this. But I appreciate everybody. Crypto Trend Trader with the midweek market update. It is 7/21/2021, 10:51 p.m. Eastern Standard Time. And I'm out of here.